and now we're there. And I think we're on now, and now I'm just going to fix this. I don't know what happened here. It's very strange, but we'll fix it. Okay, now we're going to transition that, and as soon as I see that there, I'll know if we're good or not. Okay, we're live on YouTube, and we're live on Instagram, but with a very small screen, which is okay. So I'm gonna have you move toward me just a little tiny bit. And okay, if you come a little closer, we're going to have to just shift you toward me just a little bit more in the shot. And then I'm going to rearrange the shot so that because in Instagram right now, you're on screen and you're the only thing on screen with the case. And so if I'm going to talk, I'm going to have to transition. So I'm going to set it up so it looks right while you're reading. Okay. So when anybody joins, they'll be able to see us both, but and we're checking. Okay, so now actually it is working. So you can go back to where you were.
Awesome.
Yeah. So it's working as I expected, which is like you just have to. It's like a small video, but in the big video. So it's showing the whole. It's not cutting it off.
Awesome.
Okay. So we're set. Hi.
Hello, everyone. Welcome to the Tax Files.
Nice. Welcome to the Tax Files with us. Okay, so today we are reading DAC Investment Holdings, right?
Yes.
DAC Investment Holdings. We already read the tax court case. We read that a couple weeks ago.
Yeah, 2 weeks ago.
Okay. And it was long. It was a long
case. 200 paragraphs?
Yeah, it was 200 and something paragraphs. Yeah, it took us more than 4 hours to read it. Now we're doing the Federal Court of Appeal case.
Much shorter.
Yeah, much shorter. And let's just take a look at, there's some interesting development on there that we just learned, like today.
Yeah, because we read the case when it came out.
We did.
A few weeks ago.
That was on Chinese New Year. It was like a couple Saturdays ago. A few Saturdays ago.
But now there are amended reasons for judgment.
Okay.
Because they probably discovered, like we did, that there were a few mistakes.
A couple of errors. Yeah.
A couple grammar errors. And
a couple of small errors. Yeah. Right, exactly. So we have a new judgment, but also there's that like footnote. So read the footnote.
We have a new judge.
Yeah, we have a new judge.
Because the amended reasons are not by Justice Woods, they are by Justice McTavish.
Yeah.
And if you look at the very end, now the case is signed by Justice McTavish. So Woods is no longer there because she's no longer in the court.
Okay, so presumably they can't change the outcome. That would be, I mean, maybe you could, but like, why would it matter? Why would it matter if Justice Woods was a justice on the court at the time they made the decision and then retired? What difference does it make? Oh,
because she can no longer write reasons.
She can't sign off on the corrections.
It's interesting because it says reasons for judgment by Woods. The star Woods has retired from the court.
Okay.
Amended reasons for judgment are being given by the remaining members of the panel in accordance with subsection 45.3 of the Federal Courts Act. And so amended reasons for judgment by Justice McTavish, concurred by Justice Walker.
Okay.
So now we have Justice McTavish basically being like, I wrote this case.
Okay. So that's not really strange. So, okay, that's interesting because when we first looked at it, the practitioners are going to be like, oh, Justice Woods, she ruled against us. Now they have to say, well, Justice McTavish ruled against us and not Justice Woods. But it says, so reasons for judgments by Woods and amended reasons for judgment by McTavish. Okay, great. Okay, so Ready,
Start
set?
reading.
Here we go.
Woods.
Wait.
Woods at the beginning, but Justice McTavish
Okay.
at the end.
Okay, I'm with you. Here
Woods.
we go. Yeah.
Introduction. This income tax appeal concerns tax measures applicable to Canadian-controlled private corporations, CCPCs,
Oh, yes. Those mysterious beings.
that minimize any tax deferral advantage arising from holding investments through a corporation. In this case, transactions involving the respondent, DAC Investment Holdings Incorporated, DAC, were undertaken to circumvent these measures and to enable DAC to benefit from tax deferral in relation to an anticipated capital gain on the sale of shares.
Okay.
The shares to be sold were transferred on a tax-deferred basis from one corporation to another. Both corporations were CCPCs and DAC, the transferee, had no other assets. Then DAC effected a continuation from Ontario to the British Virgin Islands, BVI.
Right. Yeah, you should have some sort of flight sound, like flying away sound for that.
What else do we have? Yeah, going to the BVI.
Yeah, why not?
For purposes of the Income Tax Act, the ITA, the continuance resulted in DAC being deemed to be incorporated in the BVI and to no longer qualify as a CCPC. Accordingly, the tax deferral was achieved, subject to the application of the General Anti-Avoidance Rule, GAR, set out in Section 245 of the ITA. I think that was my headphones.
Oh, sorry. Can you fix
I
mine?
think you were number 2.
Oh, yeah, that's better. Okay.
That's better?
Yeah.
The Minister of National Revenue reassessed DAC pursuant to the GAR and denied the tax deferral.
Okay.
A tax court allowed DAC's appeal, per Justice Darcy.
Yeah.
The Crown now appeals to its court. For the reasons that follow, I conclude that the GAR is applicable and would allow the appeal.
Okay.
Cool.
So, cool. Wait, you're supposed to they allowed the GAR. Good or bad?
I don't know. Is it good? I will apply the GAR. Yeah.
Right. Is it that or is it? It could be. It could be. It depends on who you talk
depends
to.
on who you are. If
Yeah.
you are DAC,
Yeah.
you're not happy.
Yeah, exactly.
If you're the Crown, you're happy, I guess.
Happy, not happy. It's hard to say. Okay, so we start again at the beginning with the facts. I love to see the facts.
The facts.
Redux, yes.
An agreed statement of facts, ASF, and a supplementary agreed statement of facts, SUP-ASF, SUPAFs, SUPAFs, are reproduced below. I use the defined term set out in the AFs in these reasons. There was no witness testimony before the tax court, and the parties filed no documentary evidence except for the formal continuance documents. That's interesting. No witness, no evidence. Like, how long was this hearing? Like, just argument?
Yeah, just paperwork.
Just
argument. So
yeah, just arguments.
like an hour each, so 2 hours.
Yeah, you don't even need to go to court. You could just send a written submission.
Yeah, just send a good document. Yeah. Okay.
The ASF states, 1, the appellant DAC Investment Holdings Incorporated was incorporated under the Business Corporations Act Ontario on September 11, 2001.
Mm-hmm.
The appellant was incorporated as...
Remember? Right. Okay.
It's like, when were we incorporated again?
On September 11th.
9/11, yeah,
Wow.
okay.
9/11, wow.
2001. The appellant was incorporated as Linkline Group of Companies, Inc., before changing its name to 2005430 Ontario Inc. on October 10, 2014, and then to DAC Investment Holdings on April 27, 2015.
Okay, that's already weird. Like,
Yeah, why would you change to a number company? Like, usually...
It seems a little bit like it might have been we were in a losing company, let's hang on to it, and then we'll refresh and restart, you know, in a Dean's Night kind of a way.
Possibly.
Yeah, could be.
David Siviero has been the sole director and has held directly or indirectly at least 50% of the common shares of the appellant since its incorporation.
Okay.
At all material times, Mr. Siviero resided in Ontario.
Okay.
On or around October 22nd, 2011, Mr. Siviero acquired convertible promissory notes from Soberlink Inc., which were subsequently converted into common shares of SoberLink. Mr. Siviero purchased additional common shares of SoberLink on or around June 26, 2013.
Okay, so convertible promissory notes. So, and then the SoberLink, which are going to be convertible into common shares.
Yeah.
Okay.
On or around December 31st, 2013, Jackal Holdings Limited, Jackal, acquired from Mr. Siviero all common shares of SoberLink held by Mr. Siviero, the SoberLink shares.
Yeah.
Mr. Siviero has been the sole director and has held all the common shares of Jackal since its incorporation on December 11, 1996.
Okay.
On October 3rd, 2014, SoberLink received a non-binding indication of interest from a potential buyer. On April 14, 2015, the appellant acquired the SoberLink shares from Jackal pursuant to a Section 85 rollover transaction. On that date, the appellant's only assets were the SoberLink shares. At the time of transfer, and since their respective incorporation dates, the appellant and Jackal were each a Canadian-controlled private corporation, CCPC, as that term is defined in subsection 125.7 of the ITA. On April 15, 2015, SoberLink CEO informed Mr. Siviero that the sale of a division of SoberLink was close to completion. In order to effect the sale, the SoberLink shares would be sold to a third party.
Okay.
On April 29, 2015, the appellant was continued into the British Virgin Islands as a company incorporated under the BVI Business Companies Act 2004, the BVI Companies Act, and was issued a certificate of registration by the Register of Corporate Affairs.
Okay, so our Canadian company is continuing into BVI.
Yeah, so no longer Canadian.
No longer
We're now a British Virgin Islander.
Yeah. British Virgin Islander.
A country with which we don't have a tax treaty because we don't want the residents to be BVI. We want to make sure the resident stays in Canada.
That's right, because if there was a tax treaty, it would have tie broke to
BVI probably.
Okay.
And now you have some FAPI problems.
Yeah. Who needs it? Who needs them? Who needs those problems? Those are some serious FAPI problems right there. Yes. Well, you know, that's the sound of FAPI when you hear that little creeping noise. Yeah. Okay. All right.
As a result of the continuance, the appellant's 2015 taxation year ended on April 28, 2015. As a consequence of the continuance, the BVI Companies Act applied to the appellant as if the appellant had been incorporated under the statute.
Okay, so this is where we get that deeming rule. All right. Okay.
As a consequence of the continuance, the BVI Companies Act applied to the appellant as if, at all relevant times following the appellant's continuance, the appellant's central management and control remained in Ontario, Canada. On May 14, 2015, the appellant sold the SoberLink shares to an arm's length party and realized a capital gain in the amount of $2,359,295.
Okay.
The appellant reported a taxable capital gain of half this amount in relation to the sale of the SoberLink shares. The appellant filed its tax return for the taxation year ended on April 30th, 2016, the 2016 taxation year, on the basis that the appellant was a corporation resident in Canada, subject to tax on its worldwide income under the ITA. The appellant was a private corporation, as that term is defined in subsection 89.1 of the ITA, and the appellant was not a CCPC. The appellant did not pay any dividends during the 2016 taxation year. The appellant earned only the gain on the disposition of the SoberLink shares and the foreign exchange gain during the 2016 taxation year. The appellant's 2016 taxation year was assessed by the Minister of National Revenue, the Minister, as filed on January 16, 2017. By notice of reassessment dated December 23, 2020, the Minister reassessed the appellant's 2016 taxation year by increasing Part 1 tax by $229,219 and B, assessing arrears interest of $57,935.19.
Arrears interest, as you may have seen recently in the case of BNS versus the Keep. Yes, right.
I mean, it's quite interesting to see that it's $239,000,
Yeah.
and the interest is almost $60,000.
Yeah.
It's like
It's a
more
lot.
than 20% of the assessment
Yeah.
is just interest.
There's a lot of time has passed.
Yeah, 2016 to 2020, and I don't know if the appellant paid this amount when it was assessed.
Probably not.
Probably not. So there's still arrears interest
Yeah.
accruing
Yeah.
to this day,
yeah.
presumably.
Yeah.
In determining the appellant's liability to tax,
Sorry.
in assessing the appellant's, in determining the appellant's liability to tax, the minister determined that the general anti-avoidance rule, the GAR, applied.
Yep.
The additional $240,000 of Part 1 tax assessed by the minister was the result of two changes. Assessing refundable tax on CCPC's investment income pursuant to Section 123.3 of the ITA in the amount of $91,003, and B, denying the general rate reduction otherwise available to the appellant under Section 122.4 of the ITA in the amount of $148,000.
Okay, so just a reminder then, you've got a capital gain, and what the minister is doing is saying, I'm going to add refundable tax.
Yes.
And I'm going to deny the general rate reduction that you took because you said you were not a CCPC.
Yes.
Okay, yep.
The appellant objected to the reassessment by notice of objection dated February 3rd, 2021, more than 90 days having elapsed after service of the objection, and the minister having not notified the appellant that the minister has vacated or confirmed the reassessment or reassessed. The appellant appealed the reassessment to this court pursuant to paragraph 1691B of the ITA.
Okay.
So that's the thing that says if the minister doesn't reassess after 3 months, 90 days, you can go to court.
Okay.
You don't have to wait
Yeah.
on the minister's reassessment.
Okay. So if the minister assesses you and you say, hey, I disagree with you, and they say nothing, you could then just go to court. Okay.
Yeah. Or you can just wait until they say something.
Yeah. Yeah.
Because you kind of lose this first appeal at the objection stage. You just go to court, so you never have an objection officer looking at your case.
Yeah. I see what you're saying. Yeah.
Yeah.
Okay.
The appellant concedes that it received a tax benefit as that term is defined in the ITA, and that this tax benefit is derived from A, Section 123.3 not being applicable, and B, Section 123.4 being applicable.
Yep.
That's a classic case where you say, okay, I received a tax benefit, fine, I will not disprove it.
Yeah.
The quantum of this tax benefit is computed in accordance with the charge as at Appendix B.
Yep.
The appellant, do you want to look at Appendix B? Or it's actually, I don't have it.
I don't think it's in...
No, it's not.
Right.
The appellant concedes that the following transactions were avoidance transactions, as that term is defined in Section 245 of the ITA. A, the rollover of the Soberling shares from Jacal to the appellant, and B, the continuance of the appellant into the BVI on April 29, 2015.
Okay.
The appellant abandons the argument that if the GAR is found to apply, the minister is required to redetermine the appellant's refundable dividend tax on hand, as formally defined in subsection 129.3 of the ITA, and the appellant's eligible refundable dividend tax on hand and non-eligible refundable dividend tax on hand, as presently defined in subsection 129.4 of the ITA.
Shoot, I wish I had the...
This is surprising.
Yeah, I know. So I wish I had the prior one, because I thought that concession was about the statutory limit.
Oh, there's one more after.
Okay. So this one is the appellant saying, hey, originally I said to you, okay, if you're going to say I'm a CCPC, then you have to also recalculate my eligible dividend.
Which makes sense, because if you assess refundable tax, I expect that I will get this money refunded eventually when I pay the dividend to the shareholder.
Right.
But so, as the appellant abandons this argument, why would you do this? Because it's like, okay, I will pay
I think
tax?
It's an interesting precedent to set. If you say, okay, whatever you recast my transaction as GAR, everything flows from that.
Mm-hmm.
That might kick me the wrong way the next time. Maybe I just want you to determine the GAR and leave me alone, even though this time it's going to mean the refundable tax that never can get refunded effectively, which is strange.
It is, because even if you deny a tax benefit, it doesn't mean that you recalculate other accounts.
Yeah, so it'd be interesting if that when they then made the dividend, if they get reassessed on, and they, they say, hey, this is They could go back and say, "Hey, we called it a refundable tax, and we refunded the tax because you guys found it was we were a CCPC when we did it."
I don't even know how it would work in CRA systems. Like, would they automatically calculate a refundable tax? I don't know.
Yeah, I don't know.
No idea.
Okay.
The respondent concedes that the appellant did not make any misrepresentation that is attributable to neglect, carelessness, or willful default, and that the appellant did not commit any fraud in filing the return for the 2016 taxation year or in supplying the information under the IT in respect of the 2016 taxation year.
Okay, so the reason to say that is that fraud would leave the statute of limitations open forever, and we're not doing that.
Yeah, want to make sure that if ever you apply the statute limitation of CCPCs, that you would not get an unlimited possibility for the CRA to reassess.
Yeah. Okay.
Which makes sense. I don't think there is fraud here.
Right.
It's a GAR case. It's not neglect.
Yeah. Yeah, I agree.
And the SUPAFs states one thing only.
It only says one thing. Okay.
From 2015 through 2019, David Severo was the sole common shareholder of the appellant.
What? Okay. Apparently this matters. Okay.
Didn't we say that he owned at least 50?
Say it again?
Because David Severo has been sole director and has held directly and indirectly at least 50% of the common shares of the appellant.
Yeah, at least 50%, and now we're saying all.
He was the only one from 15
at
to
all
19.
Times. Yeah.
I'm not sure why it's relevant.
I don't know. I don't either. I mean, obviously the reference is to CCPC, so Canadian controlled has to be more than 50% not Canadian.
Yeah, but
so it never was. But once you're hit past that, what difference does it make if it's 51 or 100?
Exactly my question, because we already stated that he owned at least 50. So for sure, the appellant is a CCPC.
So we don't know why the court is telling us this.
Why do we want to fully own sole shareholders? I'm not sure.
Is there something about control here that like you are fully in charge of everything that's happening here? I don't think there's any doubt about that.
But there's still control because he owned more than 50. So of course he controls.
Strange. Yeah.
I don't know.
I don't get it.
Okay. As mentioned in paragraph 25 of the ASF, the Minister reassessed DAC pursuant to the GAR by increasing tax payable pursuant to section 123.3 of the ITA and by denying a tax deduction that had been claimed pursuant to section 123.4.
Okay, so just remind me, so the reassessed DAC pursuant to the GAR by increasing tax payable by section 123.3, is that the refundable tax? And then denying a tax deduction that had been claimed by 123.4, and is that the general rate reduction of 10? No, that abatement is 10%. The general 13%.
Yep.
13%. Okay.
It is useful to briefly describe these provisions.
Yes. Indeed, it is. Let's do it.
Section 123.3 levies a refundable tax on investment income earned by CCPC.
Okay.
Section 123.4 permits a deduction from tax which results in a tax rate reduction.
Yeah.
The provision applies generally to corporations, but the rate reduction does not apply to specified types of income, which include investment income of a CCPC.
Okay, so generally to corporations, but the rate reduction does not apply to specific types of income, meaning including capital gains.
Yes, of course. Both provisions have the effect that tax cannot be deferred on investment income earned by CCPC. Below, I collectively refer to this provision, section 123.3 in the exclusion and section 123.4 as anti-deferral measures. This is interesting because it's not you're never paying the tax, it's just you're paying it later.
Yeah, it's deferral, right? So the idea is that the refundable tax is making sure you don't use an incorporated pocketbook. That's how I always teach it in yeah. Okay, so we don't want people putting their portfolios in corporations, getting a lower tax, waiting to pull the income out. So we just hit the corporation with an extra level of tax, this refundable tax. And then when you do pay yourself a dividend, then you get the tax back at the level of the corporation. You pay it at the level of the individual, reversing the possibility of deferral.
Yeah, but here it's interesting to note that the appellant stays a Canadian resident, so it's not a tax haven scheme where you get taxed in the BVI.
Yeah,
You're still taxed in Canada.
I know, it's funny. It's like the entire move to BVI the only effect it has is to stop this refundable tax, which if you go into the policy of that refundable tax, there's no reason why this should be the thing. Like, there's no good reason. It's still Canadian controlled, but it's just not a quote unquote Canadian corporation. So it's a dumb rule. I will say it's a dumb rule, but it has this effect and had this effect for many years, and people would use this kind of planning to get out of that refundable tax.
Yeah, I mean, it's kind of, I'm a CCPC as long as it's good for me, but the minute it's...
As soon as I don't want to pay... Yeah, I mean, like, let's be real. Why do I want to be a CCPC? I get the small business deduction, which brings most of my income down to a 9% tax rate. 9. Not 15, not 25, 9. So that's why I want to be a CCPC, a Canadian Controlled Private Corporation. But it comes with I think in the tax court judgment, the pluses and the minuses. The pluses and the minuses. So it comes with this disadvantage. The disadvantage of being a CCPC is that if you put your portfolio in your CCPC, you're going to get hit with this refundable tax, which is 38 2/3.
Basically,
altogether,
you would pay the maximum personal rate in the CCPC.
Exactly. So if you're a top rate taxpayer anyway, there's no disadvantage or advantage. You're not better off.
And if you're not a top earner,
you're paying more.
You're paying more.
You're paying more.
So there's no point doing this.
Yeah, it's really dumb. Don't do
You just pay a dividend.
Yeah, and that's why they have this rule. Obviously, that's why they have this rule. So, that's just like why the rule exists.
But the thing is also, you can leave money in the corp as long as you reinvest in active business. So you cannot just buy shares, but if you want to buy more equipment, that's fine.
That's fine, exactly. All right, so then, so they, both provisions have the effect that the tax can't be deferred, meaning nobody is getting rid of the tax ever. It's just a question of timing.
Exactly.
Yeah, okay.
Tax Court of Canada.
All right, here we go.
The tax court described the GAR, including its three components: a tax benefit, an avoidance transaction, and an abuse.
Yes. Good.
As stated in the AFS.
I don't know the ASFA. The ASFA.
The AS.
There just has to be I like it when it's passive. Passive. Yeah. Anyway.
Passive. Partial agreement, but this is fully agreed.
Yeah, this is fully agreed. Right. Okay. Yeah.
That conceded that it had received a tax benefit and that there were two avoidance transactions: the rollover of subordinating shares from Jackal to DAC, and the continuance of DAC into the BVI. Yeah. Accordingly, the main issue in the tax court was whether the avoidance transactions were abusive. The Crown argued that the tax court, the DAC, abused the anti-deferral measures in sections 123.3 and 122.4, as well as subsection 255.1 in the definitions of CCPC and a Canadian corporation in the ITA. The tax court first determined these provisions object, spirit, and purpose, and then determined whether the provisions were abused. As for the object, spirit, and purpose of the relevant provisions, the tax court rejected the Crown's made argument that the object, spirit, and purpose was to address tax deferral for all private corporations, not just CCPCs. In the view of the tax court, the object, spirit, and purpose was limited to CCPCs.
Yeah, and I think we spent some time on that. Like, I'm not sure I still don't get it. That. I don't either. Yeah. Okay.
As for the abuse, the tax court determined that the anti-deferral measures were not abused because they produced the result Parliament intended. Of course, Parliament just wants CCPCs to go into the BVI and not pay the refundable tax.
That's what Parliament wants.
Sure. I think you will find it somewhere in the debates. Like, this is exactly what we want.
And we want to make sure that people can continue their corporations into jurisdictions with which we do not have a tax treaty.
We want to make sure there are pluses and minuses as long as they have active income. But as soon as they don't have active income anymore,
there should only be
we don't want the minuses.
Any minuses.
But only if you have a tax lawyer that will be able to continue yourself in the BVI. We don't want to give this to anyone.
Drawing the thought bubble above Parliament's head with that idea, like, oh yeah, okay, sure, yeah, I'm sure they had it.
I mean, I kind of think that
fully in mind.
If the goal was, if you no longer have active income, then you no longer pay the refundable tax, it would be in the act somewhere.
Yeah, you would think.
Yeah, like an inactive CCPC would be a different rule.
Yeah.
I don't know. Maybe.
I don't know. There's too many rules. Like, let's be real.
Yeah.
There's too many rules. Okay.
In the course of its analysis, the tax court made the following findings. A, Parliament has chosen for policy reasons to have different sets of rules for different corporations.
It's different, remember?
Parliament recognizes a corporation may move from the taxing regime for CCPC to the taxing regime for a non-CCPC.
Yeah, ta-da.
Parliament allows for the proper application of numerous provisions of the Act whose application is conditional on the corporation either being a CCPC or not being a CCPC at a point in time or throughout a period. What does it even mean?
I can't say I understand. I mean, it's just like a factual... It's like saying, hey, Parliament drew a line, and they intend that when you're on this side of the line, these rules should happen, and when you're on that side of the line, those rules should happen. But it says nothing about what... why Parliament drew that line there. Yeah.
I mean, why do we even have CCPC in the first place?
Right. And who knows? Yeah.
There is no abuse of the provisions at issue. DAC chose to move from one taxing regime with its pluses and minuses to another taxing regime with different pluses and minuses. On the plus side, DAC avoided the application of Section 123.3. On the minus side, DAC lost access to the favorable tax rate for business income and refunds a portion of the tax applicable to investment income when dividends are paid. It also lost the benefit of the rollover provision, Section 85, and the tax deferral rules for amalgamation and wind-ups. It's like you lost something you were never going to use anyway.
Yeah, exactly. There's some artifice here as to like what has been lost, something I'm not, I don't care about, and what has been gained, the only thing I care about.
I mean, as soon as I'm in the BVI, of course, I'm not going to be an active business in Canada. That would make no sense.
Right.
Section 123.3 and 123.4 are not abused because they produce the result that Parliament intended.
Yeah.
There is no abuse of Section 255.1 because its subject spirit and purpose is to equate the place of continuance of corporation with its place of incorporation to ensure that the ITA produces the result needed by Parliament.
Yeah. Okay, so that they say that so this is all in paragraph 18 to say that the tax court determined that there is no abuse of the anti-deferral measures.
Now the standard of review.
But it is quite a setup, yes.
Tax court judgment is subject to appellate standard of reviews as set out in House and Vinicolaisen. The determination of facts and make fact and law entitled to a high degree of difference detect the palpable and overriding under error standard. Determinations of law include the extricable legal question or subject to correctness review. Do we need this paragraph anymore?
Okay, well let's just remind ourselves. The standard of review is determining mixed fact and in law, high degree of deference, and attract palpable and overriding error. And what is the contrast? If it's not palpable and overriding error, then it's
correctness.
So if it's if you're reviewing whether the tax court properly interpreted the law, correctness is the standard. Where you have fact or mixed fact in law, it's this palpable and overriding error, which means they could be wrong a little bit.
Yes,
but it has to be the wrongness has to be palpable. It always
must be palpable. You must be able to palpate the error.
The standard kind of. I'm not really sure that I fully follow. And I'm not sure.
But if you have an inextricable question of law in the mixed fact and law, then it's correctness.
Okay.
Yes.
All right. So basically, so far, here's what we have. We have the tax court saying the provisions do a line drawing exercise. They drew the line. The taxpayer is on this side of the line, not that side of the line. Therefore, I was going to say ergo, but that's a different word. So therefore, Parliament's intent was carried out. The taxpayer did nothing abusive, so no GAR. And we're saying that's not a question of law because we're not interpreting. There's not an error in interpreting the function of what are the other provisions, but the question of abuse is a question of mixed fact. Either it's fact or it's mixed fact in law.
Yes.
And since the tax court made that determination, we have to find a pretty strong error in order to override it. It's not just were they correct or not correct, but like palpable to over. So the standard is higher. So the FCA is going to have to find, like, tax court, you really did not do this right.
It's logical because if it's a question of law, then you can just redo the analysis. But it's a question of fact, then you kind of have to redo the hearing, and the appellate courts don't want to deal with evidence.
Yeah. Okay. Fair enough. Okay. That's a good point. Yeah. Okay. So off we go to analysis.
Woohoo! Introduction.
MSNBC or something. No, that's Windows. That's why I didn't recognize it.
It's Windows, yeah. We're going to go like, news alert. Analysis in DAC investment just came out. The GAR scheme was succinctly described in Cobthorne Holding Limited versus Canada, where a transaction is an avoidance transaction. A transaction that would result in a tax benefit and whose primary purpose was to obtain tax benefit. The tax benefit resulting from the transaction will be denied.
Yeah.
However, the tax benefit will not be denied if the avoidance transaction would not result in an abuse or misuse of the Income Tax Act.
Okay, so we need an abuse or a misuse.
Yep.
Yeah. Yay! Or not. Yes. Right. Okay.
The GAR determination may be divided into 3 distinct steps.
Thank you.
Was there a tax benefit? Was transaction giving rise to the tax benefit an avoidance transaction? Was the avoidance transaction giving rise to the tax benefit abusive?
Okay.
Dean's Night.
Yeah.
Is it Dean's Night? It's like
it's not really. I mean,
it's from Trustco.
No, it's actually the statute.
But it's the law.
It's the law. Yeah, I know.
This is what the law says you have to do.
I actually don't like, again, I say this every time, but I really don't like that we ascribe this to common law when this is a statutory standard. You're just telling us what the 3 rules of the statute are.
Yeah. But this is kind of better than last time because it's rephrased as questions.
Yeah, fair enough.
So I guess, okay, the questions are from common law, but it's the statute that says
exactly. That. Yeah, I agree.
In this appeal, only the 3rd step is at issue. The parties agree that there is a tax benefit in 2 avoidance transactions as described in the Fs above at paragraphs 28 and 30.
Okay.
The Supreme Court has identified specific circumstances that would lead to a finding of abuse. The avoidance transaction will be abusive where the outcome or result of those transactions is an outcome that the provisions relied on seek to prevent.
Yeah.
B, defeats the underlying rationale of the provisions relied on, or C, circumvents certain provisions in a manner that frustrates the objective purpose of these provisions. It's really like,
okay,
what's the policy behind, and like, are you respecting the policy or not?
Yeah, so the outcome the provisions rely on seek to prevent.
Yeah.
That's policy.
Mm-hmm.
Because obviously, if you're in GAR, they didn't prevent it.
Yeah, I mean, you have an anti-specific measure, and it was not able to capture
exactly, yeah. And then defeat the rationale.
Policy, clearly.
Yeah, and then circumvent provisions in a manner that frustrates the object's purpose.
Yeah.
Policy.
So this is why...
Three times saying the same, to me, the same thing.
I think there's a difference between circumventing and the seek to prevent, in the sense that the way I see it, the IT, it's like if you do something, then something happens, and you have like boxes to tick.
Yeah, yeah.
So it's either I should tick the boxes, but on purpose I decide not to tick a box doing something that is an abuse.
Yeah.
Or I could, let's say there is like 4 boxes to tick. I tick 3, but there is one of the criteria that I don't tick, and I do something to be able to tick this box. So it's either I do something like to tick a box, so I get the outcome, or I should get the outcome, and I'm trying to not tick a box to not get the outcome.
That's right, and that's what they did in Dean's Night. They did something so that last box would not be ticked.
Exactly.
And that's circumventing application.
It's like you circumvent the provision, or you use the outcome that the provisions seek to prevent.
Yeah. Yeah.
I think those are really the two.
Yeah,
Defeats the rationale. It's really the same as A in my or C. I think it's just depending on what was the planning.
Yeah. Agreed. Yeah. Okay.
Accordingly, the question to be decided is whether the tax court erred in concluding that the result of the avoidance transactions did not defeat or frustrate the object, spirit, and purpose of the provisions at issue. Okay. I mean, yeah, okay.
I mean, whether the tax court erred palpably and in an overriding manner, right? It's not just error, right? I mean, that it's not just erred. It's like, do you see what I'm saying?
I think the GAR question could be extricable. I'm not sure. Are we gonna see the correct standard? Because
they just told us the standard was palpable and overriding error because it was mixed fact and law. It was either fact or it was mixed fact and law.
They just gave us the law. Determination of fact and mixed fact and law at a high degree of difference. Determination of law are subject to correctness review. Yeah. But they did not tell us what standard are we in now. Are we in a mixed fact and law? Are we in an inextricable question of law?
Well, let's find out.
I'm not sure.
Okay.
I don't know. And why is it snowing?
No.
No. Oh no, wrong bank.
Yeah, exactly. It's not okay. No more. Thank you. I'm good. I've had enough snow. That's enough. We don't need any more. Okay.
I think for next week to do small breaks, we should have like fake ads built in, like related to the case.
This is a beautiful idea. I love this idea. We're gonna pre-record some like commercial breaks for product placement. Nice. I like it. Okay. Good.
Do you want to read the ITA? We have the version for you. David Sherman's comments.
You have a lot of faith in my ability to pull off technical feats. I mean, I guess you could just have it as a sound.
Yeah, for sure.
It doesn't have to be visually different. Mm-hmm. Okay, we could give it because I think you can record anyway.
Let's find out.
I think you can record a longer.
Let's find out for next week.
So you're going to work on that. You're going to record a couple commercials, and you can set them to the soundboard next time, and then I'll react. Live to those commercials.
Cool.
Okay. I love this idea.
Okay.
That's a good idea.
The tax court reasoned that the transactions did not result in an abusive tax avoidance because Parliament only intended the anti-default measures to apply to CCPCs, and DAC was not a CCPC when the capital gain or the sale of stock-burning shares was realized.
Okay.
Further, in the tax court's view, Parliament intended that taxpayers may change their status to move from the taxing regime for CCPCs to the taxing regime for non-CCPCs, and therefore DAC's change of status was not abusive.
Yeah. Easy.
As I will explain, the tax court expressed Parliament's intent too broadly. Ooh. The result of these transactions is to defeat Parliament's objective that an individual not be allowed to defer tax on investment income by holding investments in the corporation. Parliament did not intend the result was achieved in this case. Although the statutory provisions relied on do not prevent this result, the GAR was enacted to address situations such as this.
Okay, what is she saying?
She's saying that the policy is that an individual is not allowed to defer tax on investment income by holding those investments in a corporation.
Result is to defeat Parliament's objective that an individual not be allowed to defer. Okay, and so just to go back to the tax court again. Tax court reasoned that the transactions were not abusive because Parliament only intended the anti-deferral measures to apply to CCPCs. So, okay, I will say, from the tax court's perspective, fair enough, it is a dumb rule. Why do you only have the anti-deferral rule for CCPCs and not for non-CCPCs?
Why is it fine that... Imagine that... Maybe that would not work. But imagine that the appellant was incorporated in the BVI from the outset.
Right. Never a CCPC.
Yeah, further imagine that there are other shareholders that even if it was incorporated in Canada, it's not a CCPC.
Yeah.
then
what?
why is it fine for Mr. Siviero to defer taxes in this scenario and not in this one?
Yeah. Like, I don't understand that rule. Like, I don't understand why it's possible that you could have a personal holding company holding all your investments and get deferral. Even leave us. I don't take advantage of the small business deduction. Let's say I don't take advantage of it ever.
Yeah.
I just am sitting there at the net federal rate, but the net federal rate is 15%. That's way lower than my personal individual rate. Why should I be allowed to have that? Like, to me, I don't understand that policy, but Parliament put that policy in place when they reserved the refundable tax to only apply to CCPCs and not to apply to private corporations held by Canadians holding investments that are only subject to the net federal rate. Like, I don't understand that idea.
I'm not sure that there is a policy not allow to defer tax on investment income broadly like that, because it's only for CCPCs.
Yeah.
The only way you don't get this tax deferral is if you own shares of a CCPC. Why is that? Why is it fine to defer tax if it's not a CCPC?
Right. So I'm not sure. So I don't agree with the policy, but I agree that's the law.
That's the law, for sure.
So then that's not quite right to say that there's a general parliamentary intent to stop the incorporated pocketbook, because that's not the case. We don't stop the incorporated pocketbook if you're not a CCPC.
Because I see more like if you have a CCPC and you earn active income, it's either you reinvest in your company, or you pay a dividend.
Right.
You cannot just sit on the money for years, because you will pay more tax than if you pay a dividend directly.
Yeah.
And so the policy is more that we want those active businesses to make more money by reinvesting their income. Okay. Is that the policy? I mean, is DNT therefore measure the policy, or is it the reinvestment of income in the CCPC the policy?
I don't know.
I'm not sure.
I mean, when I read these regimes, I think this thing has got out of control.
Mm-hmm.
So that somewhere along the line, somebody decided we should have a small business deduction, but we don't want people parking portfolio investment. But why not just apply? This is what I don't understand. Why create a separate regime for Canadian controlled for the small business deduction, and then confine the minuses, the refundable tax, to that regime? Like, why would you? Who decided to do that? And then, having decided to do that, you can't then say that there's a general policy. What does she say? General policy objective that an individual not be allowed to defer tax on investment income by holding investments in a corporation. But that's not the case. That is not a general policy.
I mean, why couldn't you say the policy is you have those small businesses in Canada. The CCPCs, usually they are like small businesses, because the CCPC rate is on the first $500,000, cannot be publicly traded, has to be Canadian.
Right.
So on those small businesses, we want to make sure that they grow, and eventually they could be publicly listed or have foreign investors, etc., or have like people investing in them. Couldn't I say the policy is, I want to make sure that if ever you have extra income in the company, that you reinvest it in the company to produce more active income, and eventually you get out of the CCPC regime. Could that be the policy?
But even so, okay, yes, it could be, but it still doesn't solve this incorporated pocketbook problem. Like, because either you're against that or you're not against that.
Because if you're against people using corporations to earn investment income, you would apply this policy at large to everyone.
Yeah.
It'd be like, if you're a company, you cannot have investment income. You have to pay it back to the shareholders or to reinvest it.
Now, I would say we always make an exception for public corporations because public corporations may hold investments for cash flow, liquidity reasons. And you don't want to like halt that kind of thing. You can't say like every public corporation that has investment income is now going to have to pay a higher rate. Like, to me, it's just like, I understand.
Maybe they should. I don't know. Maybe there should be like a capital tax on investment income in corporations in general. Maybe there should be.
I think if you do that, you run into a competition problem.
Yes.
Probably.
Yeah.
Okay. So there's a reason. There are reasons. But when it comes to non-public corporations, what is the reason? There's no reason not to say like we don't want incorporated pocketbooks.
I don't get why is the refundable tax not applicable to corporations that are not public or crown corporations.
Yeah.
Because if this is the policy, if 26 is right,
yeah,
then the law does not follow the policy.
Okay, so then I think this is a vulnerability going up if it goes to the Supreme Court.
Yeah.
That statement right there is a vulnerability because all you have to do is look at the rules and say, well, that's not actually true. Mm-hmm. We don't have that. And we don't have that policy.
Especially since the Crown was arguing that there was a general policy for all private corporations that you cannot defer taxes on investment income, and the tax court said no, of course not, because it's only for CCPCs.
Exactly.
And we were like, yeah, of course it's only for CCPCs.
We don't know why. We don't know why it's only for CCPCs.
I have
but
no idea.
It factually is.
Mm-hmm.
Yeah.
So okay. I don't see how you can get away from this.
I think this is a vulnerability of the case, and it will be very hard to apply this. Let's say this doesn't go to the Supreme Court, and this is the final word. Next time you look at a CCPC, is the federal court going to repeat that claim, which is not borne out in the Act, in the pages of the Act? I don't think so. That is very interesting. Could be an interesting case to intervene because this is not a correct position if the Crown takes this position.
This is not for the Crown.
All right.
I mean, it would be just to say it's Parliament's objective for CCPCs to blah blah blah, but why would you have this policy just for CCPCs? It cannot be the policy underlying the CCPC regime because it doesn't make sense with the whole scheme.
I agree.
So there must be something else.
There must be something else, right?
Force the CCPC regime.
I think that's right, and I don't know what that is. I mean, I think we need to do a little historical. We need to do a little Hansard.
I mean, it might be a case of I don't like this planning; it should not work, and let's find why.
Yeah, it could be. Yeah. Okay, so I think we've identified the sentence that is going to be appealed.
If it is it going to the Supreme Court? I think we are pretty much out of time. Are we not?
No. Are we? Okay, we'll check on that. Let me check on that. I'm going to look, but. Defeat Parliament's objective that an individual not be allowed to defer tax on investment by income by holding investments in a corporation. I would predict this is the sentence that goes into the taxpayer's brief on appeal. Right?
I highly doubt that this is correct as written.
Yeah. Yeah, I agree.
With respect to the federal court.
With great respect, of course. But it's just like, I don't see it. Like, when I look at the Act and I look at these provisions, I would like to see that policy. That should be the policy. I agree. Parliament should have that policy.
Yes.
But I don't think that Parliament does have that policy. For whatever reason.
Maybe it does. Maybe, I don't know how it would work outside CCPC.
Yeah. All right. So then that's why she concludes, Justice Woods concludes that Parliament did not intend the result that was achieved in this case, although the statutory provisions relied on do not prevent the result. GAR was enacted to address. Okay. So here we go. So then we get our issues. I thought we already did this, but I guess we'll do it again.
I'm just checking on the Supreme Court website if ever we have.
Okay, you check the Supreme Court website to see if it has been, if there's a motion to appeal. Is it what do you call this motion to get the Supreme
application
Court?
For
application for leave? Yeah.
No data is available in the table.
Say it again.
No data is available, so we don't have as of today
Well, so how long would they have to do it? If this decision was February, isn't it
60 days?
60 days?
Is it 60 at the Supreme Court?
So it's the end of this month. Or what was the first time? It was February 20th
Well,
or
the
something?
thing is, we don't have the first date now.
Yeah, but
February 20th.
February 20?
20. So it's
So
soon.
April 20.
If it's 60 days. I'm not sure.
Okay, let's check. We're going to check to see how many days do you have? How many days do you have to appeal to Supreme Court on your? This is a little test for the audience. How many days after you receive your negative result at the Federal Court of Appeal? How many days do you get before you have to file leave to appeal to the Supreme Court?
According to Google AI,
Yeah.
it's 60 days.
Yeah. That's what I thought it was. Actually, with Husky, I think I was paying attention and they filed on the 59th day or something.
Usually that's what they do. Right?
Yeah. Yeah.
And I'm going to look at the law
Okay.
because it's probably more reliable to look at the act or the regulation with it.
What? You mean you're going to rely on the law instead of AI?
The rules of the Supreme Court of Canada.
When a party I wonder how they say this. When a party disagrees with the blah 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 blah. I don't know what the right words are. I don't know what the words are for this.
Maybe it's in the rules and it's leave to appeal 25.
Rule 25?
Rule 25.
Okay.
Let's look.
Leave to appeal, Rule 25. I suppose I could be looking online as well and we could look at it together, but I'll let you just...
An application for leave to appeal must be bound and consist of the following: a notice of application, a memorandum of argument,
All right. 25?
not exceed...
Application for leave to appeal, service and filing, notice of application, citing the legislative provision, reasons for judgment, formal judgment, memorandum of argument, blah, blah, blah. It doesn't tell us when. It's not telling us when.
Maybe it's in the Supreme Court Act.
Oh, really? Okay, we'll go up to Supreme Court Act. Okay, and this is
Procedure?
judgments, jurisdiction, procedure and appeals, the appeal.
56, 57. The appellant may appeal from the whole or any part of the
Yeah,
judgment.
time period. Here we go. Case of appeal for which leave to appeals doesn't say.
60 days.
Where do you see
58 1A.
it?
In the case of an
there it
appeal
is.
for which
Okay,
leave is
60
required,
days.
60 days.
Okay, so that means they have 20 days. No, what is today? Today's the 7th. So they have 13 days. So 2 weeks.
Yeah, 2 more weeks.
To appeal, and we're going to predict right now, right here and right now, that the appeal is going to say that this claim, Parliament's objective that an individual not be allowed to defer tax on investment income by holding investments in a corporation, we are going to predict that the appeal, the application for leave to appeal, is going to say that the Federal Court of Appeal erred when it claimed that this broad intention exists. And that the tax court was right when the tax court said, no, it's only with CCPCs that we have that policy.
But fun stuff, at 59.4 of the Supreme Court Act,
Okay.
notwithstanding
Wait,
anything in
almost
this
there.
act,
1 sec. Okay.
a judge may, on an application for a leave to appeal in forma pauperis.
Oh my gosh. Okay.
I like how the law is in Latin, so no one can understand
Yeah.
it.
That's we try our best to sound fancy, right? It's kind of like building columns on the Supreme Court. You got to have them not because you need columns architecturally, but because you got to show that it's an important building. And this is how we do this in legal text. We show that it's an important concept by using Latin in forma pauperis, meaning I don't have money for this.
Meaning, actually, it's that, right?
Yeah.
Huh.
Yeah.
In poor form.
Yeah, because pauper is a word that we used to use for somebody that doesn't have any money. It's sort of a derogatory term in English.
So if you don't have money, the rule that applies to you is in Latin, so you cannot understand it.
Yes. Yes, the irony is not lost on me. Right, so a judge may, on application for leave to appeal, informa pauper. So if you are broke, allow the appeal by giving applicant leave to serve notice of appeal, although the time prescribed by Section 58 has expired. Okay, so more or less you get 60 days.
Yeah, you get 60 days.
You get 60 days, and they'll give you more if you're informa pauperis.
Yeah.
Okay.
If ever you can read Latin, they will give you more.
Not an issue for our good friends at DAC Investment and SoberLink.
Oh, I think they should do it in forma pauperis, because now they don't have any money. They have to pay everything to the CRA.
Yeah. Sad. Sad. Womp womp.
Do we have a sad one? Oh, yeah. Womp womp.
Womp womp. It's a very pathetic sound. Okay.
Okay, let's continue.
All right.
Oh, wrong one.
Good.
Issues. The central issues raised by the Crown in this appeal, or A, does the object, spirit, and purpose of the anti-deferral measures extend to all private corporations, whether they are CCPCs or not? If not, did the tax court err in concluding that the avoidance transactions were not abusive?
Okay.
As I explained below, it is not necessary to consider issue A, which is the Crown's main position.
Oh boy, okay.
Because B is dispositive of this appeal. At the hearing, the Crown emphasized issue A. However, I declined to comment on issue A and leave the issue for another case. I am mindful that the Supreme Court instructed courts to approach a GAR decision with caution because the decision could affect other transactions that are not before the court.
Okay, so just a second. Justice was saying, I'm not going to decide whether it extends to all private corporations, whether or not CCPCs.
But didn't she just said
yes? I'm really confused by that.
Yeah.
Yeah.
And then the confusion sound.
Okay, and then if not, so assuming I'm wrong, that it does not apply generally, then did the tax court err in concluding that the avoidance transactions were not abusive? So assuming the object does not apply, okay, this is a very negative question. There's a lot of double negatives here. So assuming that the anti-deferral measures do not extend to all private corporations, assuming they do not, then did the tax court err in deciding that you did not abuse?
And the answer would be yes.
Yes. Right.
That's a good way to not answer the question you just answered.
Very strange construction here. I'm just trying to wrap my head around it. Like, why is it written this way? I don't quite understand it.
I'm just curious to read the Crown's position on this. Like, how would you justify that it applies to non-CCPCs?
Right. So, but what Justice Woods is saying is, I'm not even going to bother. I'm not going to look at that question. I'm going to assume that if you abused, I don't understand the construction here. She's saying A is not dispositive, B is dispositive. Yeah. So if the spirit and purpose does not extend to all private corporations,
well, she will answer the question as if the policy is only for CCPCs.
That's what she's going to do.
Yeah.
Okay, but then why? Okay, so because she's saying the Crown is raising that issue on appeal, and I'm not going to answer that issue because the only thing that matters here is, did the tax court err when it said that the taxpayer did not abuse the act when it did the things it did? And since I am going to say that the taxpayer did abuse, the tax court was wrong, you're going to win either whether the spirit and purposes anti-deferral applies or not. So I'm going to have to find another reason why you abuse the act, and it can't be this general purpose of anti-deferral. That is what she's saying here.
Yeah.
Okay, so we're going to find another reason that isn't to defeat anti-deferral. To defeat anti-deferral.
I'm kind of not convinced that if there is no general anti-deferral measure in the act, that you're not allowed to not be a CCPC once you're. It's like once a CCPC,
Right, so
always a CCPC.
I know. So now we got to find out what is the reason. If the abuse is not of the spirit of defeating anti-deferral,
then what is it?
then what is it? That's our
question.
question.
Like abusing the fact you're no longer a CCPC, but you're allowed to not be a CCPC anymore. You could go public.
Is this introducing a Stubart-esque business purpose rule into the continuation regime?
It seems very close to that. It's
well,
like,
let's see.
if you continue in the BVI, okay, but then what is the test?
Right.
Like, oh, but I want to build a hotel in the BVI because it's a beautiful place,
Yeah,
and
sure.
I want to,
That's
on
not
my
what they
island,
did.
I want to build a hotel.
Yeah,
Am I allowed to
sure.
build a hotel on my island in the BVI? Or is it, oh, you were a CCPC in Canada, so you're no longer able to build a hotel on your island that you just acquired in the BVI?
No, that can't be the
That
policy.
can't be the policy.
No.
Impossible.
Impossible.
But do we need an economic substance test for the after you continue in the BVI?
I don't know.
What if you contemplated building a hotel on the island, but then you decided not to?
Yeah, what if I had plans to do? Okay.
Yeah.
Anyway, yes. Okay, I think we've settled on the issue here,
Yes.
which is Justice Woods is telling us, I'm going to give you a reason other than a general anti-deferral object that the taxpayer abused.
Mm-hmm.
Okay.
And she's saying, and in discussing B, I have assumed without deciding that the answer to A is no.
Yeah, there you go.
In other words, the object, spirit, and purpose of the anti-deferral measures does not extend further than
Okay.
CCPCs.
All right, so we're going to just assume. So the Crown has asked us to look at this. I'm not going to look at it. I'm going to assume no without examining it.
Yeah.
So that's almost an admission that maybe that position wasn't all that sound to begin with. But isn't that her own position?
But didn't she just say, if you go back,
The tax court, paragraph 26.
the result of these transactions is to defeat Parliament's objective that an individual not be allowed to defer tax on investment income by holding investment in a corporation. She doesn't say CCPC. She says
Yeah, so
in a corporation.
there's like a weird inconsistency here between this paragraph 26, which seems conclusory. Like, I'm going to tell you, I'm going to explain this. Taxpayer abused it because tax court expressed Parliament's intent too broadly.
It's like point first writing. This is a conclusion. This is the why.
I'm so confused.
And after an explain, but then you enter the explanation. It's like, oh, by the way, the answer to that is no. But I just said it was yes. So I'm a
but
bit
also,
confused.
like, wait a minute. Isn't paragraph 26... Isn't the problem that the tax court expressed Parliament's intention too narrowly?
Too broadly.
I'm so confused now. Honestly, the more we read this, the more confused
This is
I
very
get.
confusing.
Yeah, exactly. What is going... I don't understand. Okay, let's just go back. Let's just look at it one more time. Question to be decided, paragraph 24. Question decided is whether the tax court erred in concluding that the result of the avoidance transactions did not defeat or frustrate the object spirit of the provisions at issue. And then she says the tax court reasoned that the transactions did not result in abusive tax avoidance because Parliament only intended the anti-deferral measures to apply to CCPC.
This is too broad. How is it? What?
Doesn't it seem like
It's too narrow.
the opposite?
But also, if you say this is wrong because it's too narrow, then you have to say it applies to corporations that are not CCPCs. I don't understand how you...
I'm so confused. I don't understand this. I don't understand how... Yeah. I don't understand how we get from 25 to 26 and then to 27.
And 229. Like, the answer is no.
Okay, it's very strange. Let's see if we get any clarity by reading it. I suspect we will not, but I'm really confused by this. Okay. All right, so she's saying, I've assumed that the answer to issue A is no, and no extension past CCPC. So now we've got to do this abuse and, like, let's find out what's going on.
Okay, where the evidence of transactions abusive.
Okay.
Introduction. The legal principles concerning abuse are very well known. Look, I just
You
added
said
the
very, but it's just, just well.
In general, a court must, first, determine the object, spirit, and purpose of the relevant provisions, and second, determine whether the result of the transaction fell within or frustrated that object, spirit, and purpose. Object, spirit, and purpose for the relevant provisions.
Okay.
The first stage.
So just to note, remember the tax court, the provisions were the thing that makes you no longer a Canadian corporation, which is 255.1. That was a provision that is the provision that the taxpayer used to get out of the CCPC thing.
Can you really abuse that?
So that's where you had that question, right? And so now we're not discussing that at all. Now we're discussing the refundable tax,
123.3 and 123.4.
General rate reduction.
So you abuse the rate provisions.
Okay.
So we're not saying you abuse not being a CCPC. You abuse the rate.
Okay. It's considerably smaller question than it was at the tax court. Okay, so the first stage is to determine of the provisions that are relied on for the tax benefit.
The object, spirit, of purpose of a rate. In this case, the relevant provisions related to issue B are the anti-deferral measures in 123.3 and 123.4 and subsection 255.1.
Oh, well, there it is, 255.1.
Okay, so we're going to go back to this one.
Even though she didn't mention it earlier, it's back. Okay.
This stage raises an extricable question of law, subject to correctness review.
So now...
So it's correctness.
Exactly.
It's not overriding and palpable.
So now we're clear that it has to be correct.
Yes.
Lower standard.
Yeah.
Okay.
Well, the extricable question.
Right. Okay, good.
We're going to extract the question.
We're going to try to extricate. I think the word is extricate.
Extricate?
What a strange word.
We're going to extricate.
We're going to extricate
question.
Question?
I think there should be the first paragraph should be like, what is the extricable question? Let's extricate the question.
So here, the extricable question being whether the object spirit what is the object and
what
spirit
is the OSP? That's the
three.
extricable.
The refundable tax, the general rate reduction, and the continuation equals not Canadian law. Okay. Good. Very
Section
good.
123.3.
I'm just going to get more coffee while you read this.
Canada's major tax reform in 1971, the Minister of Finance stated that the reform had the objective that the taxation of investment income will be the same whether it is received directly or through a private corporation. This is the budget speech by the Honorable Benson, Minister of Finance, in 1971. This fundamental principle had stood firm ever since. In 1995, Section 123.3 was enacted to increase the corporate tax rate on investment income in light of this principle. The section was designed to account for current tax rates and therefore increase the corporate tax rate to prevent tax deferral when investment income is earned through a corporation. The tax is refunded as dividends are paid. The rate prescribed in Section 123.3 was increased in 2016 for the same reasons. Section 123.3 provides, there shall be added to the tax otherwise payable under this part for each taxation year by a corporation that is throughout the year a Canadian-controlled private corporation an amount equal to 10 to 2/3% of the lesser of A, the corporation's aggregate investment income for the year within the meaning assigned by Section 129.4, and B, the amount, if any, by which the taxable income for the year exceeds the least of the amounts determined in respect of it for the year under paragraphs 125(1)(a)(2)(c). So this is paragraph 36 now.
Yep.
The tax court described the object, spirit, and purpose of this provision at paragraph 139. A consideration of the text, context, and purpose of Section 123.3 leads to the conclusion that the object, spirit, and purpose of the section, its rationale, is to together with the refundable tax regime and the dividend gross up and tax credit scheme, prevent the use of a CCPC to
CCPC, not a private corporation.
A CCPC.
It does. So despite Benson saying private corporation.
This is the same question. It's the same as in Perrier, which was not in the case, but so in Perrier, the question is...
something is water, a beverage?
So in French, it says boisson gazeuse, which would in English be translated as soft drink. Yeah. But the law translates boisson gazeuse as carbonated beverages. But the Minister of State Finance, parentheses Finance, because she was in charge of the ETA and not the ITA.
Okay.
She says in the speech, we are going to tax soft drinks.
Oh.
So can you override the text of the provision with the speech of the minister? And the answer, of course, is no.
No.
Because you do the interpretation of the text of the law, not the text of whatever the minister said.
So, but did somebody make a mistake? Like, how do you go from private corporation to Canadian-controlled private corporation is the only thing listed in the actual rule that applies, and non-CCPC is not covered by this rule?
I don't know.
Come on. That's not good.
Like, why are you saying through a private corporation? And then when you apply the test,
I don't get it.
It's Canadian-controlled private corporation.
It says the taxation of investment income will be the same whether it is received directly or through a private corporation. Private corporation can be now two things, either a CCPC or a non-CCPC, and you only tax half of them.
Yeah.
Come on.
So this cannot be the policy if it's not all across the board.
I agree. Okay.
The use of a CCPC to defer taxes that may be payable at a higher rate.
37?
I'm still in the quote at 36.
Okay.
By the shareholders of the CCPC while maintaining the integration of taxes paid by CCPCs and their shareholders. Well, you have the thing about integration also in the CCPC regime. And the idea is that if the company pays tax, then the total amount of tax paid by the corporation plus the individual must be equal to whatever the individual would have paid if earned directly by the individual.
Yeah.
And so...
I mean, you still have that policy.
You still have that policy.
For everybody. Public and private.
So you would need a refundable tax refunded in non-CCPCs to respect the integration principle.
No, but there is deferral.
There is deferral.
Integration, at the end of the day, integration means you're going to face the same rate either way. But deferral interrupts the effectiveness of that rate.
Yeah.
And if you only fix it for one kind of corporation and not the other...
Because the problem with deferral is that if you play with your marginal rate, you can actually defeat integration.
Yeah.
Like if you earn $100,000 in a year versus if you earn $100,000 in 10 years, you're going to not pay any tax if you earn it in 10 years, and you're going to pay...
That's true.
Probably 30% or something if you earn it in 1 year.
Yeah, which is why deferral is key.
Yeah.
Because you control when you're going to face whatever rate you face, which can also have an effect on which rate applies. Agreed. Okay.
This is a description.
So paragraph 36 is the tax court's description of the object, spirit, and purpose. And the tax court is saying the object and spirit is to prevent the use of a CCPC to defer taxes. This doesn't seem wrong to me.
That seems right. I think that's fine.
That's what Parliament
wrote. You cannot use CCPCs for taxes.
I don't like it any more than the fact that we have a treaty with Luxembourg that exempts a whole bunch of income and does not stop you from doing an ALTA.
Yeah.
Okay? But that's the treaty we have. Mm-hmm. Okay.
But also, if this is right, then the policy is not an anti-deferral measure across the board. The policy must then be... We want to make sure in the CCPC that you reinvest your income, and you cannot just sit on investment income. It's either you reinvest or you pay a dividend back. Like, it's either you decide not to grow and you're taxed personally, or you decide to grow and then you're not taxed personally. It's kind of if you're a small business, it's either you're just yourself in the business and you have to pay a dividend or you decide to grow as a company.
Right.
And that seems like I don't know if this is just like my intuition like now, but I don't know if it's backed by anything, but it makes sense.
I understand that because the point is, if I leave my investment gains in the corporation and reinvest them, I'm gonna get hit with the top tax rate in a CCPC, but not in a non-CCPC.
But you will still have the low tax rate for the first $500,000 of income.
I understand that, but you get that anyway. So you could contribute your after-tax investment dollars to the corporation. What I'm saying is this: if you have a CCPC, if you put your stock in the CCPC, you're going to get hit with the top tax rate because of the refundable tax.
Yes.
If you reinvest that income, the corporation had to pay that top tax rate. If you instead don't do that because you're not at the top tax rate, let's say you put it in a TFSA or you put it in even a tax-bearing account, and then you take the proceeds each time you have the proceeds and you contribute those proceeds to your corporation, then you won't get that refundable tax on those proceeds. You'll put those proceeds into your active business and you'll start making more money from that. That's the policy. Yes. The policy still has to be, don't park your investment income in a CCPC.
Yeah, but just in a CCPC.
But if you have a non-CCPC, go nuts. Enjoy.
Sure. It doesn't make sense.
It doesn't make any sense. This is bad policy. This is bad policy. Okay. So we've established that this is bad policy.
Okay, what about we had the law that you're either private or public. If you're public, you can do whatever you want because you have like millions of shareholders. We don't care.
Yeah.
If you're private, we could give you the small rate, the plus, if you're a CCPC. But why don't the minuses apply all across the board?
Agreed. 100%. That is what the law should be.
Like,
let's write an article. Let's propose it. Let's use this to show like this makes no sense. You can't defend this system.
It doesn't make sense.
It makes no sense. All right. So, okay. So that was the tax courts in 36. And then the FCA says...
This is the description of the overall taxation regime for investment income in the ITA. But Section 123.3 only addresses the part of the scheme aimed at deferral. 123.3,
again, being the refundable tax portion.
In my view, the object, spirit, and purpose of Section 123.3 is to reduce income tax deferral opportunities that individual earning investment income directly might otherwise obtain by earning such income through a CCPC.
Okay.
Isn't that exactly what the tax court said?
I see no distinction. I see no distinction. Nothing. I see nothing to celebrate here. Okay.
Section 123.4.
Okay, and just to remind, 123.4 is the general rate reduction. General rate reduction, which is a dumb. Again, already it's a dumb thing that we have. Instead of having a federal tax rate, we have a starting rate 38%. Then we give an abatement for the provinces, and then we have this general rate reduction, which applies across the board unless it doesn't, which is 13%. And that gets us down to a federal rate of 15%, which instead of just saying 15%, we say 38 minus 10 minus 13. And we make everybody do the math just to figure out the rate. Yeah. Okay.
Personally, it's a better policy to just get a high rate and do a bunch of incentives than just say, I will lower the rate.
There's some history here, for sure. Yeah. Okay. So this 123.4 is the general rate reduction, the 13% reduction, which you lose in some cases. Okay, here we go.
Yeah. In 2001, Section 123.4 of the ITA introduced a reduction in the corporate tax rate for all corporations except those that already enjoy an incentivized tax rate. The reduction was designed to increase the international competitiveness of business in Canada.
There you go.
Investment income of a CCPC already benefits from an incentivized corporate tax rate because a portion of the tax is refundable as dividends are paid. These refunds were introduced as part of the 1971 tax reform mentioned above. Canada, Department of Finance, the
Okay.
Budget Plan 2000, Better Finances for Better Lives.
So the argument is that the refund,
Is already
Is an incentive?
incentivized because
the refund,
the refund.
the dividend refund.
Yeah, because it's not really tax, right? You get it back.
But how is that an incentive when you had to pay it in order to get the refund? I don't understand the incentive.
The incentive is getting the refund.
It's putting you at, oh my gosh, okay.
I'm not sure. I'm not. It doesn't really make sense.
Yeah.
But I think it's clear here that the OECD is wrong in saying that better policies for better lives. It's
They
better
should be saying
finances for better lives.
better lives.
It really sounds like the OECD motto.
It's all just BS. Let's be real. No, none of them mean any of these things they say.
Accordingly,
Okay.
investment income earned by CCPC is not included in the Section 123.4 rate reduction. Subparagraph B3 relies on the definition of full rate taxable income. The relevant provisions are set out below.
Okay, so since we read those at the tax court, we get to skip them now. You can go back and read them in the tax rate, in the tax court decision
Yes.
reading. And we're just going to skip right past them to get to 42. Now we're going to get our OSP of this.
The tax court described the object, spirit, and purpose of Section 120.4 at paragraph 158 of the reasons.
Okay, what did they tell us?
It is clear from the text of Section 123.4 the various statements made by the government when introducing and subsequently increasing the general rate reduction that the object, spirit, and purpose of Section 123.4 is to lower the general corporate tax rate such that the highest non-refundable corporate tax rate levied under the Act is 15%.
Right.
The 15% is composed of the 28 general tax rate minus the 13 general rate reduction provided for in Section 123.4.
Okay, I'm just going to take issue once again that is not a discussion of the object, the spirit, or the purpose. It is a description of the function. The function of.
I mean, why would you want to lower the tax rate?
That would explain the object, the spirit, the purpose, and telling me that you reduce the tax rate.
Because
does not
the tax court is saying
why.
the object of reducing the tax rate is to compute a lower tax rate.
This cannot be correct.
No.
As far as a statement of OSP. All right, and so then what does Justice Wood say?
The tax court used the term general corporate tax rate above to refer to a rate that is not incentivized. The tax court's description of the object, spirit, and purpose describes the legislation, but not its rationale.
Yeah, okay, good.
In my view...
We agree with that.
I agree.
Give some applause for
okay.
paragraph 43. Good job.
Good job.
We agree.
Oh, even more than that.
Yeah, okay, good.
Okay, good job.
Good.
In my view, part of the OSP or rationale of Section 123.4 is to foster international competitiveness for Canadian business.
Sure.
As mentioned above, Section 123.4 does not apply to already incentivized rates such as investment income of a CCPC.
Okay, I'm not sure what the second sentence is doing there, but the first sentence is an explanation. Why are we giving rate reductions to corporations? Because we are not alone in the universe.
Yeah, another question is, how can you abuse this policy? Like, the policy is to be competitive.
Yeah.
Can you really say, like, by paying less taxes, I ensure that you are competitive? How could you say this is an abuse? Like, the way I see it, if I pay less tax...
That's good.
Then good.
That's good for Canada. Because we're competitive. It proves that we're competitive.
Yeah.
Ta-da! Exactly. All right. So, 45.
As far as I am aware, fostering competitiveness was the only reason stated by the Department of Finance for providing a tax rate reduction for corporations, except where the rate was already incentivized. However, it is inconceivable that the Department of Finance...
Oh, man. That's the one we've got to add that. Okay, I'm writing it down. Add inconceivable. Because this is not the first time that we needed it. Okay. Inconceivable. It is
inconceivable that the Department of Finance was not aware and took into account that excluding investment income of a CCPC would have the effect of preserving the fundamental principle stated in the 1971 budget speech that investment income should be taxed the same whether it is received directly or through a private corporation.
No. Okay,
there's
something's
okay.
something's
First
wrong.
of all, Since when do we have fundamental principles from a budget speech?
Yeah, okay. Well, I think because the budget speech is when the government announces what it's going to do and then it does it, right?
But it doesn't
But it
do
doesn't
it.
always do that.
I mean, the budget speech says it's the
did
same
not do
whether
it.
through a private corporation or individual.
Yeah, it did
But the
not
law says a CCPC.
Yeah.
So how is there a fundamental principle in the Act that is not in the Act?
Okay, so let's just break this down. She says fostering competitiveness was the only reason. Okay. That's where, except where the rate was already incentivized. So fostering competitiveness, unless we already fostered competitiveness in some other way. And then she says, but it's inconceivable that the finance was not aware that excluding investment income of a CCPC would have the effect of preserving that fundamental principle. What is this sentence? Okay, what is this sentence? Okay, we got to rewrite this sentence because I don't understand what is being said here. What she is saying is that the excluding investment income of a CCPC would preserve the competitiveness fostering principle. How? I don't know, because the excluding investment income is not about fostering competitiveness. It is about preventing avoidance, preventing deferral. So it's not about preserving competitiveness. I think there's something wrong here. Maybe I'm not understanding. Let's just double check. She's referring to the 1971 budget speech. That investment income should be taxed whether received directly or indirectly. So we've got two items. One is this 1971 speech that talks vaguely about direct or indirect private corporation.
Yes.
And the other is this budget statement saying we're reducing the corporate tax rate for competitiveness. So she's saying, okay, so let's just reconstruct. She says that we have the budget statement. What is the year of the budget statement of the general rate reduction? 2000. Okay, so in 2000, when finance is talking about we've got to reduce the rate to be competitive, they knew that they already had a principle, which is to not incentivize incorporated pocketbook.
Yeah.
Okay, for want of, we're just going to shorten this, whether received directly or directly through a private corporation. That's the incorporated pocketbook, the general idea. And she's saying when Parliament decided to reduce the corporate rate, it knew or had to know that it already had a principle in place that we should not at the same time incentivize incorporated pocketbooks.
Exactly.
Okay.
That's it.
Okay, that would have been a little easier to read had she said that.
Yeah.
Okay. So now that we see that, she's saying now we have to add the CCPC wrinkle, because she's saying Parliament in 2000 would have been aware of the general statement in 1971 that all incorporated pocketbooks are bad.
Yes.
And it would have known that we only implemented this as to CCPCs. That's why she says of a CCPC.
Yes.
So we've narrowed. Parliament may have had broad ambitions in 1971, but what they actually enacted was narrowed, only CCPC.
Right.
When they come to do the general rate reduction, they know we have implemented this no incorporated pocketbook principle in CCPCs and only in CCPCs. Okay.
Correct.
Okay, I think we're caught up. We're caught up. Okay, so now what is she going to say about it?
In my view, the object, spirit, and purpose for excluding investment income of a CCPC from Section 1 of the 2024 tax rate reduction is twofold. One, the investment income already has a preferential tax rate. And two, the exclusion preserves the fundamental principle that investment income should be taxed the same whether it is received directly or through a private corporation.
Okay, so
That's
I feel
it.
like we're a little bit more on track now, because she's saying the refund, when you pay a dividend, is a tax incentive.
Yeah.
So that's why you shouldn't get the general rate reduction on income that's subject to a refund.
Yes.
Tax that is going to be refunded. And that is consistent with this 1971 idea that, hey, we shouldn't have incorporated pocketbooks, at least in CCPCs. Okay. I'm feeling a little bit more confident about that. Slightly more confident about that. Okay. So she's saying the object and purpose is both of those. The income already has a preferential tax rate, and the exclusion preserves that no incorporated pocketbooks principle. Even though we've already assumed it only applies to CCPCs. No incorporated pocketbooks in CCPCs. Right?
Yeah.
Okay.
Makes sense.
Okay. So that's our purpose for the general rate reduction. That's interesting. Wait a minute.
The purpose for the general rate reduction is...
For excluding investment income.
For excluding,
Yeah. So it's two rules, because 123.4 is where you don't apply the... Let's just take a look at it.
When you apply the general... When you don't apply the general rate reduction, I guess.
Yeah, so if you go to 123... Oh, I have to go to 123.4. It's probably in the case, right? Corporate tax rate reductions, and if the corporation is a CCPC, then only the non-investment income gets that general rate reduction. Okay.
Well, it will be the active business non-CCPC rate.
Yeah.
Like everything that is more than $500,000.
Yeah, okay. Okay. We're on track.
Okay.
So that's the object and spirit for excluding investment income from the general rate reduction. Okay. And so that's the thing that they will have abused.
Yes. Because they were able to get the general rate reduction on investment income.
Yeah. Yeah, that's it.
Yeah.
Okay, and finally we get to our continuing into the BVI problem.
Subsection 255.1 of the ITA was amended in 1994. In general, the amendment provides that a corporation that continues into another jurisdiction by article of continuance or similar constitutional documents is deemed from the time of continuance to be incorporated in the new jurisdiction.
Yeah.
The amendment to subsection 255.1 was part of a new taxation regime designed to make corporate continuances fairer for taxpayers, according to Michael Flatters. Problems with the existing regime were well documented in several articles. In one, the authors described that the prior legislation yields to unappetizing results of departure tax followed by continued gains in taxation of the corporation as a resident corporation. Robert Cousin and Robert Dart.
Yeah.
The two Robs.
The two Roberts. Two of many Roberts in Canadian tax law.
Yeah. This is partly because, even though the corporation has continued out of Canada, it is still incorporated in Canada and is subject to tax provisions that apply to such corporations.
Yeah.
The new regime was intended to avoid this result by having residents determine whether income or losses are subject to tax in Canada.
Okay.
The amended provision reads in the relevant part.
And we read this at the tax court, and we actually discussed this issue in the tax court discussion, so we can go back to that discussion.
Let's skip this. The new regime was not perfect.
Oh, shocker.
Oh, no way.
Breaking.
I think it should be like...
Yeah. Yes.
More dramatic.
Yeah.
According to Alan...
Lanthier.
Lanthier? Is it Alan Lanthier or Alain Lanthier?
I actually don't know.
Who knows? Drop a comment down below if you know how to say Alan Lanthier.
Please help us. We don't know how to pronounce that.
We don't. Is it Lanthier? I don't know.
I don't know.
Do we have Alan on the line? You should call us.
We should just give him a call.
It's like, hey, my name is
You're
Lanthier.
on air. What? Pronounce your name. Okay.
Corporate immigration, and continuance in tax planning for Canada, U.S. international transactions, 1993 corporate management tax reforms. Following a technical analysis of the regime, the author concludes, Mr. Lanthier, at 442, the technical amendments package represents an ambitious effort on the part of the Department of Finance to set out for the first time an integrated and comprehensive set of rules governing corporate immigration, and continuance. There is, however, further work to be done.
Oh, I see.
And there are a number of areas where corrective or alleviating revisions would be welcome.
Fine. So I think the only thing that matters here is the first one, an integrated and comprehensive set of rules governing corporate immigration, emigration, and continuance. Okay.
Yeah.
Fine. It's very abstract. Like, it doesn't really add much detail here. I don't know why they cited this. Like, so what? So what?
The tax court described the object, spirit, and purpose of subsection 255.1 in its reasons at paragraph 185.
Okay, here we
The
go.
rationale for subsection 255.1 is to equate the place of continuance of a corporation with its place of incorporation in order to ensure that, upon the continuation of a corporation in a different jurisdiction, the various provisions of the Act that refer to the place of incorporation, such as the residence deeming rule in subsection 254 and the subsection 89.1 definition of Canadian corporation, produce the results intended by Parliament with respect to the taxation of corporation under the Act. So what is the policy?
The rationale is to ensure that the rules that apply to place of incorporation don't apply.
Okay, so you want to make sure that there is no difference between continuing into the BVI and being incorporated.
And yeah, that's it.
Yeah.
That would have, it would have been nicer to say that, but that's not what they said. But that's basically what they
That's
said
it,
with a lot
right?
more words.
Yeah.
Yeah.
I agree with the tax
Okay,
court.
great.
I agree with the tax court. That the amendment to subsection 255.1 is intended to be part of a coherent tax scheme for corporate continuances.
Okay.
I like how it's like, I agree with the tax court and to say nothing. However, the tax court erred by not accurately setting out the object, spirit, and purpose of the subsection because it did not describe what results Parliament intended. As stated by the Department of Finance when announcing the proposed legislation, the amendment to subsection 255.1 is part of an improved set of rules for all individuals and corporations moving into or leaving Canada. The rules will result in residents determining whether income or losses are subject to tax in Canada.
Okay.
In my view, the OSP of subsection 255.1 is to make tax provisions fairer for corporations moving into or leaving Canada by way of continuance.
Well, how can you violate or abuse a rule that is to make your immigration fairer? By using immigration to make things unfair. That's how you would abuse it.
Yes.
Yeah.
I'm kind of not convinced this is the OSP.
I know,
I think
I don't think fairer.
fair. The OSP is to make things fair.
To me it's too abstract.
Yeah.
It's just too abstract. So if you said it to somebody who doesn't know anything about income tax, what you would say is, we've got a bunch of rules that try to decide where a corporation is resident, and corporations can be resident wherever they want. You can set up a corporation anywhere.
Yeah.
And so if you have a Canadian corporation and then one day you don't want to have a Canadian corporation anymore, you can shut the corporation, sell all the assets, and all kinds of things are going to happen, and then start that corporation up in another jurisdiction. Or instead of doing all of that and causing all of this tax to arise, you could just move to the other country, right? And we call that continuing into the other country. And so if your rules never let you drop your Canadianness by continuing into another corporation, then taxpayers have all kinds of incentives to have to undergo expensive, costly, administratively burdensome, blah, 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 all this stuff to end their Canadianness and establish overseas. And if we want Canadians to be able to do that, then we could make it easier for them and just not have all of those negative consequences. Does that make it fairer for them? I don't know what's fair. I don't know what they haven't defined fairness. I don't know what fair means in this context. But
Fair?
make it easier? Yes. To streamline, to make it more
Well, I don't think
fewer tax consequences to migration? Yes.
Well, I think the
What does that have to do with
I
fair?
think what she's talking about fairness is the idea that it should not make a difference whether you are continued into a foreign jurisdiction or incorporated in a foreign jurisdiction.
Exactly.
There should be no difference between continuing somewhere and just shutting down in Canada and starting
there.
back somewhere.
So I don't like, we
How
can have a
this is
discussion
fair?
about fairness, but I don't think this is about fairness. I think this is about saying we don't want to have taxpayers have to go through a bunch of tax producing activities in order to move.
Mm-hmm.
We don't want that. Whether fair or not fair, it's probably more likely that it's about efficiency than fairness.
Yeah.
Right? I mean, it's probably more likely, like, I just want you to be able to pick up and go if that's better for your business.
Yeah.
Right? And not, what does this have to do with fairness? But there's like a hidden subtext here, which is like, imbues all of our discussion of international tax, which is like, what is any country's real interest in having Canadians go invest their money somewhere else? The idea of that is that you're going to go invest somewhere else to expand the Canadian brand and become a champion, like a global competitor, right?
Yeah.
It's not so mom and pop can like get out of the Canadian tax net. It's not, it is about trying to industrial policy our way into being there in the international, in the global market with the big players from other countries.
Yes.
Right?
Yeah.
So it's not about fairness. It's again about competitiveness. And in that sense, then you're right back to where you were before, which is how do you violate a law that's meant to make it easier for you to go overseas and be competitive? If you then go overseas and you don't have to pay tax, then you seemingly...
You achieve the result that Parliament intended.
Exactly. Which would make the tax court decision correct and the FCA decision wrong. Okay.
Canadian control private corporation.
Yeah. Oh my gosh. So we have no reason. We would love a transition here. Why are we all of a sudden talking about CCPCs? I don't know. Let's find out. Yes.
The term Canadian control private corporation is central to this appeal.
Sorry. Can you mute me for a second so I can go over?
Yes.
Okay. Pause and resume. Thank you. It's been 3 weeks of having like a little cold. I'd like spring to be here, please, so that this could go away. But yes, sorry about it.
It was first introduced in 1971 and is included in subsection 125.7 of the ITA. As set out in the definition below, a CCPC must satisfy the following conditions. A. The corporation must be a private corporation, as defined in subsection 89.1 of the ITA. Generally, a private corporation is one that is resident in Canada, not a public corporation, and not controlled by a public corporation. B. The corporation must be a Canadian corporation, as defined in subsection 89.1 of the ITA. Generally, a Canadian corporation is one that is resident in Canada and incorporated in Canada. C. Corporation must be Canadian controlled, as described in the CCPC definition in subsection 125.7 of the ITA. This generally refers to a corporation that is not controlled by a non-resident.
Okay.
Let's read the definition. No, we already read this.
Yeah, we read that.
Let's skip.
Okay, so we're given no reason that we just explained what the CCPC rules are. There's no reason for this at all.
No, it's just like this is the introduction. Okay. These are the rules. Okay. Question is, did the tax court err in determining that the transactions did not frustrate the object, spirit, and purpose of the relevant provisions? Introduction. The GAR is not applicable unless it may reasonably be considered that an avoidance transaction would result in the misuse or abuse of the provisions of the ITA. The provision reads...
Okay, and we read that last time, so we'll skip to 58.
Yeah. The question in this second stage of the abuse analysis is whether an avoidance transaction falls within or frustrates the identified object, spirit, and purpose of the provisions relied on for the tax benefit.
Notice that there's no explanation of the OSP for the CCPC. She just introduces a CCPC, tells us about the 3 rules, and then doesn't talk about the OSP. So it's not up for debate whether they abuse the CCPC provision at all.
No.
Okay.
I don't think it was an issue.
Well, remember it was whether you could we talked about could you abuse the definition of CCPC, right? So we've moved on.
Yeah,
we're not having that conversation here. Yeah,
the avoidance transactions will be abusive where the outcome or result of the transaction A is an outcome that the provision relied on saying to prevent, defeats the underlying rationale. Am I just reading exactly what I just read?
Yes. Well, we saw it before, so it's the case is repeating itself.
Yeah,
we already saw it. Yeah. Yes.
I'm just like, am I on the wrong page?
No, you're on the right page and just doing it again because I don't like this. I do wish that the court wouldn't do this because we've already done this. But anyway, okay. So she's saying in the second stage of the abuse is whether. What was the first stage? Oh my lord! Okay.
Identify the OSP and then
identify the OSP.
Are you abusing the OSP?
Now, did you fall within or frustrate the OSP? Okay. The second stage is fact intensive. Okay.
And reviewable for palpable and overriding error.
Okay, so correctness on OSP. Now
But-
we're going to say, did you abuse the OSP? That is fact or mixed fact in law. Okay.
but
I got it.
absent an extricable error of law.
Yeah.
There are two avoidance transactions at issue in this appeal. One, the rollover of the shares of Soberling from Jacal to DAC, and two, the continuance of DAC into the BVI. These transactions work together to result in the acknowledged tax benefits for DAC. Since the continuance is the transaction that enables the tax benefits, the abuse analysis will largely focus on the continuance.
Okay, then why mention the rollover?
I don't know.
Okay.
Did the tax court err in concluding that the transactions were not abusive? One of the tax court's central findings in its abuse analysis is that the avoidance transactions are not abusive because Parliament intended a corporation that is a CCPC may take steps to become a non-CCPC. The tax court's conclusion is held below. Prior to being continued in the BVI, the appellant was on one side of the dividing line, and after it was continued, it was on the other side of the dividing line.
Yeah.
This is exactly what Parliament intended.
Yeah.
Exactly.
Exactly.
As just discussed, Parliament recognized that the corporation could move from one side of the dividing line to the other. It enacted provisions to facilitate this movement.
Yeah. I mean,
it's not false. To put it
starkly.
Starkly. Starkly.
What was the word for BNS?
Striking.
Striking. And this is starkly. Oh, my word. Okay.
To put it starkly.
Yeah.
The tax court suggests that Parliament intended that subsection 255.1 of the ITA may be used to circumvent anti-default measures that are a critical part of a long-standing Keynesian tax policy.
Oh, boy. I don't know how stark that is. Tax court, to put it starkly, tax court suggests Parliament intended... What? Tax court... She's saying tax court suggests that Parliament intended for you to use the continuance rule to get out of CCPC free.
Yes. So this is what she's saying. This is a loaded sentence. Because it's not exactly what the tax court is saying, is it?
Wow. She's saying the tax court is suggesting that Parliament meant for you to play games.
Yeah.
And they gave you continuance so that you could play games. So that's a straw man. She's about to knock it down. She's going to say the tax court suggests that, and they must be wrong.
I mean, it must be wrong.
Right.
If you phrase it that way, for sure it must be wrong.
Exactly.
But is it exactly...
A bit of a straw man.
Is it exactly what the tax court said, though?
Actually, yes. Yeah. Because the tax court said 5.1 was intended, the OSP is to intend you to be able to migrate. You migrated. So it's not true to say that the tax court said that it was intended to be used to circumvent. No.
But like also, if it's intended to be used to circumvent,
I would say the treaty with Luxembourg is intended to be used to circumvent the rules for capital gains. Sure,
but it's a deal. You can sign a bad deal with Luxembourg. It's not a problem.
Yeah.
It's not law.
But why would I, as Parliament, ever create a rule intended to let you circumvent another rule I created?
It's like, I have a rule.
Is that not the definition of speaking in vain?
It's like, I have a rule.
Yeah.
That applies to you.
Yeah, but here's a way to get out of it.
If you don't have tax lawyers.
Yeah.
If you do have tax lawyers, you can get out.
Here's how.
No problem.
That is exactly right. That is what they're saying.
If you are in Pauperius something, you will pay tax. But if you're not in Novem Pauperius, you will not pay the taxes.
In Forium
Pauperius.
Okay, so this is a claim. This 62 is a claim. She's saying the tax court is saying the intended to circumvent.
I think someone somewhere is going to say she mischaracterized what the tax court said.
Yeah, for sure. Yeah, this will be in the appeal. Yeah. Okay. So the tax court supports
its conclusion by noting that Parliament enacted certain provisions to facilitate movement from being a CCPC to a non-CCPC.
Okay.
Well, I mean, it should be a box on your TT2. Like, do you want to be a CCPC?
Yeah.
Like,
check the box.
If this is the idea,
I know.
It should be a check the box.
I know.
No, it's like it's tick the box as long as you have tax orders.
As long as you have tax orders, which should never be the rule.
No, that couldn't be the rule. It's not possible. It may be that Parliament enacted certain provisions to facilitate movement in specified cases. However, even if Parliament recognizes that generally a corporation may take steps to cease to be a CCPC, this does not mean that the GAR cannot apply on the facts of a particular case. The tax court erred in law when it effectively determined otherwise.
Okay.
As noted in Copthorne at paragraph 66, while a taxpayer's transaction will be in strict compliances with the text of the relevant provisions relied upon, they may not necessarily be in accord with their objective purpose. In such cases, the GAR may be invoked by the minister. Another of the tax court's central findings is that DAC did not abuse the provisions at issue because it chose to move from one taxing regime with its pluses and minuses to another taxing regime with different pluses and minuses. On the minus side, the tax court listed several favorable provisions in the ITA which applied to DAC when it was a CCPC, but no longer applied to DAC following its continuation in the BVI. Although DAC may have theoretically been subject to minuses, this does not mean that this factor should be taken into account in the factually suffused abuse analysis.
Factually suffused abuse analysis. Whoa! Factually suffused abuse analysis. Say that 10 times fast.
Factually suffused abuse analysis. I can start like rapping. Factually suffused abuse analysis. Factually suffused abuse analysis. Factually suffused abuse analysis.
Factually suffused abuse analysis. Factually suffused abuse analysis. Factually suffused abuse analysis. Wow. Okay. Got it. It is only
relevant if the minuses were material to DAC.
Okay. Well, we said that earlier. Like, well, what's the point of listing all these minuses that you're not going to do anyway? Yeah.
DAC's counsel.
Hey, it's good that we are in the mind here. We're like we're anticipating the argument, and then here it is. That's nice. That's nice to know.
DAC's counsel suggested an argument that the minuses were material because DAC had suffered from a longer reassessment period, and the GAR reassessment actually occurred within that longer period. I am not persuaded that DAC was adversely affected because of this, nor am I persuaded that potential minuses were material at all.
Okay.
Cool. Finally, even if they were minuses to the continuation, DAC acknowledges that the two transactions in question were undertaken to obtain tax benefits. It is not plausible that the transaction would have been undertaken if DAC considered that the minuses outweighed the pluses.
Okay, fine. I get it. Sure.
In summary, the pluses and minuses were an irrelevant factor in this case, and the tax court erred by concluding that there was no abuse on this basis.
Okay. Okay, so the tax court said there can't be abuse because there's a line. On this side of the line, there's pluses and minuses. On the other side of the line, there's pluses and minuses. Parliament allowed you to go from one side to the other. When you went from one side to the other, you got some pluses and minuses. You lost your small business deduction. You lost your ability to do this, that, and the other thing, but you got these other things. Yeah. No abuse. And Justice Woods is saying no because all the minuses on this side, you kept all the pluses and avoided the minuses that were supposed to attend to that status by jumping the line at the right moment.
And then you
when
jump the line.
When there are no minuses.
There are minuses, but you would never be caught by those minuses.
They're immaterial. Yeah. Okay.
Oh yeah, they are like immaterial?
Good, nice. Exactly.
It's a ghost.
Like a ghost, an apparition, yeah. Phantom minuses.
Oh, phantom minuses.
Okay.
The tax court's finding that there was no abuse of the anti-deferral measures cannot stand in light of these errors. In addition, the finding that there was no abuse in subsection 255.1 is owed no difference because the tax court did not correctly state the provisions OSP as I explained above.
Okay.
Accordingly, I will undertake a fresh analysis of whether the avoidance transactions abuse these provisions. Okay. Just like an intervener must be fresh.
It's got to be fresh. Okay, we're going to do a fresh analysis of the abuse. Okay.
Oh, too bad I don't have some like ad for toothpaste.
Yeah, fresh.
You want a fresh analysis?
Okay, so you're going to have to preview for next time which ones we're going to use. That's good because you'll come up with some good commercials. I'm sure of it. Okay. 72.
First, there was an abuse of subsection 255.1. The
Yeah.
object, spirit, and purpose of this provision is to make tax provisions fair for corporations moving into or leaving Canada by way of continuance. DAC's continuance fell outside of and frustrated this object, spirit, and
Okay,
purpose.
so she's going to tell us how it wasn't fair.
The continuance into the BVI had nothing
Oh,
to do
boy.
with developing ties or business interests in the
Oh,
BVI.
boy.
Economic substance!
Yeah.
Economic substance!
Yeah.
DAC remained a resident of Canada because its central management of control remained in Canada, which doesn't even has any connection with business interest. You could have a business in the BVI and still be a resident of Canada.
Yeah, for sure.
Why is it relevant? If I'm starting my hotel in my island in the BVI, but I remain in Montreal, I will be a resident and
Yeah.
I do the central management in Montreal.
Yeah.
My corporation is a resident of Canada.
Yeah, but the worst part, I think this is a vulnerability. Saying nothing to do with developing ties or business interests is not. You said the purpose was fairness.
Yeah. How is it unfair?
Yeah. Okay.
Further, aside from obtaining the tax benefits, DAC's continuance into the BVI is virtually inconsequential.
Okay, so we're getting close to like sham. Remember the old sham
window
cases?
dressing.
Oh, yeah, all that. We're getting close to that, like which was rejected soundly in
But
Stubart.
you cannot say that incorporating somewhere is a sham because
Exactly.
you are in
Exactly.
the books of this place.
It's just not going to work. This is not going to work.
Cannot be a sham.
Since Stubart, this is not going to work.
Yeah. It works on economic substance. If you want to put an economic substance
Sure.
test, fine. But that's
Maybe
not
in the
Canadian
GAR.
law.
Maybe in the GAR, but it's not.
But it's not. No, the car is a lack of economic substance.
Yeah.
Yeah, there's a lack of economic substance.
Okay, but if the OSP is fairness, what difference does the economic substance make?
I don't see.
Yeah, I don't see it.
The certificate of continuance provides that DAC is continued in the BVI as a company incorporated under the BVI Companies Act. There is no reason to think this is material to DAC other than the tax benefits. There is no reason to think that you would incorporate anywhere but for
Yeah, I know.
tax benefits.
I know.
The use of subsection 255.1 was simply the means to achieve tax benefits. This was not the object or purpose, no more spirit, of this provision. The spirit is gone.
Where is the spirit? I can't find it.
There is only object and purpose, no more spirit.
No more spirit.
So you abuse a fairness provision because you use the fairness provision to achieve tax benefits?
That the fairness provision was meant to give you.
Yeah.
Yeah. It's vulnerable.
So
Yeah.
the only reason why I would apply the GAR is because there is no economic substance. If there were economic substance, she would not apply the GAR because that's the rationale of the provision.
Okay.
She's using a economic substance test.
Yeah, she is. Yeah.
Turning to the anti-default measures in sections 123.3 and 150.4, these provisions have also been abused. The result of the continuance circumvents the anti-default provisions in a manner that frustrates the OSP of the provision.
Spirit is back.
Spirit is back.
Spirit is back. We found it. It is among us.
It was back
It
to
is with us.
123.3 and 123.4. It left to 55.1 to
Yeah.
go back to the other
But
provisions.
it's here now, yeah.
I agree with the Crown. When it says that if one can so easily obtain tax benefits by circumventing anti-default measures, the effectiveness of these measures is severely eroded.
Yeah.
As mentioned earlier, Canada's system of taxing investment income of CCPCs ensures that tax is not deferred. In this case, the anti-default measures become elective in practice because they were circumvented so easily. Parliament did not intend this result. Yeah, that's what we were saying earlier. That it's not a check the box.
Yeah. Yeah. Okay.
Like, if you wanted to check the box, you would have created a check the box.
Yeah, and you didn't.
Yeah.
Yeah.
In summary, the tax court erred in finding that the GAR did not apply. I find that the GAR does apply.
Okay.
The continuance of DAC to the BVI was used as a means to circumvent the anti-deferral measures. The transaction fell outside and frustrated the rationale of Section 255.1. The anti-deferral measures in Sections 222.3 and 223.4 of the ITA were also abused because the transaction defeated the anti-deferral rationale of these provisions. Reasonable tax consequences.
Okay, I will say I don't disagree with the. I know. So there's a lot of like misdirection in the analysis, but at the end, what she's saying is you used the continuance rule to achieve continuance for reasons that the continuance rule was not created for you to achieve. And what were those things you achieved? Well, they were in 123.3 and 4. They were anti-deferral rules that would have applied to you had you not continued. So you use the continuance rule to get out of deferral.
Yeah.
The anti-deferral rules.
I think it's saying, like, we see what you were doing, where you were coming. Like, when you liked being a CCPC, you were very happy to be a CCPC. Yep. But the minute you no longer have active income and you only have investment income, then you try to get out of the regime.
Yeah.
But it's not fair. Like,
I think it just does not solve the problems we've identified here, which is that having cabined the refundable tax to the CCPC regime, having done that,
yes,
you do not have a general anti-deferral spirit. You do not. You have an anti-deferral spirit in the CCPC, but otherwise you do not have it.
But the problem is that you can get out of the CCPC regime by becoming a private corporation that is in control. Yeah. In that case, there is no more anti-deferral measures.
Yeah, all you have to do is sell or get like your American cousin to come into your CCPC, and you're out in a different way than so the continuance is one way to get out, but you can get out any number of ways.
I mean, is it saying that you can never get out of the CCPC regime? And if yes, then if I pre-plan that I want eventually to get out, I will just incorporate in the BVI. And can I abuse the CCPC regime by incorporating in the BVI from the outset? Yes. I don't think you can.
Well, now we're going to get to substantive CCPCs, which is really the Parliament's answer to this.
Yes.
So, in a sense, it's a bit moot, right? Like, it's possible that the taxpayer might say, well, there's no point fighting this because they've since changed the law to substantive CCPCs anyway. So, this is a one-off at this point. But if they hadn't done that...
I don't know how much it costs to go to the Supreme Court. But now you have tax court saying, yes, you don't have to pay taxes. Right. Federal court says, no, you have to pay taxes. Yeah. So,
but, I mean, the taxes were not astronomical.
It's not that much.
Right.
And that's
I think you said it was like 90,000 or something?
A bit more. It was 200-something plus 60,000 of interest.
Okay.
So, really, you're not fighting
a tax nothing. Bill. I'm not saying it's nothing.
It's not nothing, but you're not fighting like a $10 million tax bill.
Yeah. All right, so that's the entire holding right there, right? 77. That's the entire reasoning right there. And then we go on to like, okay, now I've decided the GAR applies, so then what's going to happen? Let's find out.
Reasonable tax consequences. Under subsection 245.2 of the ITA, the application of the GAR results in the denial of the tax benefits resulting from the avoidance transactions. As agreed by the parties, your tax benefits are derived from Section 123.3 not being applicable and from Section 123.4 being applicable to DAC, following its continuation into the BVI. In addition, at the hearing, the Crown acknowledged that DAC likely would be allowed dividend refunds if dividends are actually paid.
Yeah.
So there would be a dividend refund, tax on hand, if ever it pays dividends. But how would you compute this? I don't know.
Yeah.
Scary. DAC submits that should this court determine that the GAR applies to the avoidance transactions, it is also reasonable to apply the normal reassessment period of a CCPC, which is 3 years.
Here's
instead of the actual normal assessment period for DAC, which is 4 years. This is significant because the assessment at issue was not issued within the 3 years normal
Right.
reassessment period. Accordingly, the reassessment would be statute barred.
So this is where we're going to learn that the GAR does not change.
Yeah.
Yeah.
Okay, so if it were CCPC, then it would be 3 years.
Right. And you'd get your refundable tax.
So
But why would the Crown concede that you get your refund?
I don't know.
Right.
No idea. For fairness, maybe predictability, certainty. So in this case, it's like the Crown, the CRA saying, I assess you as a non-CCPC,
Yeah.
but I will apply the tax consequences of a CCPC. But you're not a CCPC. We apply the tax consequences as if you are a CCPC.
There's a symmetry here. I mean, you said fairness, predictability, certain. You gave the trifecta, the Father, the Son, and the Holy Ghost there. Fairness, certainty, and predictability. But there is a symmetry. Like the Crown is saying, like, hey, you're gonna have to pay that refundable tax, but we're not barbarians. We're gonna give you the refund when you pay it out. But technically,
They don't have to.
No.
Technically.
and I think they won't.
Not sure they will.
I don't know. I mean, they said it at the hearing, and it's in the case now. But like,
But really, if they don't want to...
can you hold them to it? I don't think so. I don't think you can hold them to it because your position is you're not a CCPC, and that's fact. You are not a CCPC when you pay those dividends out.
You're still not a CCPC.
Yeah, so no dividend
Just
refund.
deny the tax benefits.
Yeah.
You don't become
Yeah.
what you are not.
Exactly. So I don't know. That's a little funny.
Yeah.
Okay. So the adjustment is not.
This adjustment is not permitted under the legislation. The relevant provisions
Okay.
is section 245.2 of the ITA, which
you read?
reads, let's read it.
Okay, let's read it.
Where
Why
a
not?
transaction is an avoidance transaction, the tax consequences to a person shall be determined as is reasonable in the circumstances
Yeah.
in order to deny
In order
tax
to deny a
benefit.
tax benefit. Yeah.
That, but for this section, would result directly or indirectly from the transaction or from a series of transactions that includes the transaction.
Yeah.
So it's just a tax benefit.
Yeah.
It's not like the qualification.
It doesn't. It is this accessory principle. You still did all of the underlying things you did. We still respect them. We're a country of laws. And so we're just telling you that, like, where normally the tax consequences would flow, we're cutting you off because of the abuse.
Yeah.
That's what the GAR is doing. That is, in redux, that is what GAR is doing. Yeah.
It is helpful to consider the legislative history of this provision.
I always enjoy helpful things.
As
Why are we
origi-
doing this?
I don't know.
Okay.
As originally proposed, the GAR would permit adjustments that are reasonable in the circumstances, ignoring the transactions. However, this language was changed because it was considered too broad. Accordingly, subsection 245.2 limits the GAR adjustments that may be made to deny the tax benefits that, for the application of the GAR, would result from the avoidance transactions. Accordingly, I find that an adjustment to the DAC reassessment period, such that the reassessment period is statute barred, is not within the scope of permitted adjustments in accordance with subsection 245.2.
Okay, just a little clarification that it used to say that GAR would permit adjustments reasonable in the circumstances, ignoring the transactions. Now it says adjustments may be made to denying the tax benefits that, but for the application, would result.
Yeah.
And so she's saying since that change,
So I think the idea was we don't want the CRA.
yeah, we don't want the ripple effect.
Yeah, exactly.
Just this, that's it.
The taxpayer was just like,
Crying, oh no. Yeah. Okay. Yeah.
Finally, I would mention that, subsequent amendments. Finally, I would mention that Parliament's amended the ITA effective in 2022 to address concerns with tax planning of this nature.
Yeah.
I agree with the parties that it would not be appropriate for the court to make any inference in this appeal as to the legislative intent as a result of this subsequent legislation. I have not done so.
Okay, so the vulnerability here is, hey, if Parliament changed the law, then it couldn't possibly have intended that result before because they wouldn't have needed to change the law then. But we see this over and over in Canadian lawmaking where, like, we changed the law. We saw it actually in the tenant inducement payment case as well. Remember that? Where it's like, well, is this or is this not income? Well, and Justice Woods actually is the one who said, well, I don't care that they changed the law to now include it in Section 12. They always intended it to be included, and we didn't need that amendment. That's basically what she's saying. We don't need the substantive CCP amendment, and all the substantive CCPC amendment is doing is articulating with more clarity, with more words, what we already knew to be Parliament's intent.
But also it makes sense for Parliament to not rely on GAR and actually rely on a specific anti-avoidance provision.
Yeah.
I think we cannot infer one or the other. We cannot infer that they change the law in saying that we thought it was permissible and now it's not permissible. And also we cannot say that it confirms that it was not permissible. So it doesn't say anything about the previous state of the law.
That's right. That seems right to me.
Yeah.
Like I don't know how else you can function in a common law system. You can't have courts saying, well, since between the time this case came and my decision today, Parliament clarified its position. Because it clarified, then it couldn't have meant that before. Therefore, you always win.
No,
the cat and mouse. It just can't. Yeah, it's not
because
gonna work.
you don't need a GAR in that case. I mean, Parliament would not do any anti-specific measures because it would be like, no, it's captured under the GAR, and let's wait for a GAR decision. It doesn't make sense.
Yeah, it doesn't make sense.
Conclusion.
Okay, here we go.
I conclude that the GAR applies to transactions at issue. I would allow the appeal with costs and set aside the judgment of the tax court. Making a judgment the tax court should have made, I would dismiss the appeal of the tax court with costs.
Okay.
Anne L. McTavish. I agree. Elizabeth Walker.
Okay, that's good. They get some applause for that. Okay, so that concludes DAC at the FCA. Yeah. So I think in 13 days we'll see if we were right about they're going to appeal, and the basis of the appeal will be that the OSP is incorrectly stated, that there is no general anti-deferral policy, that the taxpayer can't have abused the continuance rule because if on fairness grounds, like that cannot be.
It does not. It doesn't have any unfair.
Yeah. What's the unfairness?
Yeah,
and that the FCA established no unfairness.
Yeah.
Yeah. And yet, I would say, like, when you look at the complexity of the rules, it's very easy to be like, yeah, I don't know what the policies are here. You're right? Like, there's all these conflicting rules. But it can't be that you can be in a regime for the good days and then get out of it for the bad days.
It's too easy.
It's just too easy. Yeah. It's too easy.
I think this is kind of a case where you want the outcome to be the outcome. It's like, how do I reach this outcome without doing things that I'm not allowed to do under Canadian law?
Yeah, exactly.
Like looking at economic substance, for example.
Exactly. So there's problems here.
Yeah.
Okay, so this is what we're going to do. We're going to pick a case. Now we're going to pick a case for next week.
Okay. And
then we're going to agree that if the taxpayer appeals, then we will read the appeal, the application for leave to the Supreme Court. We'll read that.
Sure.
We'll add that.
I want to read it.
Exactly.
Because I want also, because Supreme Court is quite hard to get into, right? Because you have to show that there is a broad public importance to your case.
Then what would it be?
I mean,
given the mootness.
The law changed, it's moved.
Yeah, it could be that there's no chance just because of that mootness point.
Well, the only way I think the Supreme Court could get interest is that if there are a lot of other taxpayers in the same situation and they send letters to the Supreme Court being like, hey, if the FCA is right, like, I'm paying 10 million in taxes, etc., etc., and I think there are mistakes in the FCA decision, and please accept the case.
Or you could say the Supreme Court might be interested in whether the economic substance argument can be made. Given that the GAR has been changed and now includes some economic substance, there could be something there.
The economic substance, the lack of economic substance now is like a factor to show abuse.
It's a tends to indicate factor?
Yeah, something like that. Very vague.
Yeah.
But is this situation even contemplated by the new GAR? I'm not sure.
I don't know.
I'm not sure.
Yeah.
Because this is not like, oh, you did something without economic substance. This is you incorporated in a jurisdiction in which you don't have economic substance. But the incorporation itself doesn't bear an economic substance test.
Exactly.
It's like I start.
It's just a factual.
Yeah, I start a convenience store here in Montreal. I incorporate under the laws of Alberta.
Yeah.
Whatever.
Yeah.
Could you like attack my incorporation because there is no link between the jurisdiction of incorporation and where I have my place of business?
Right.
I'm not sure it's.
And for that matter, federal versus Quebec, for example.
Mm-hmm. And if this is true, then if you are investment income through a corporation, you don't have any reason to incorporate anywhere in the world.
Yeah.
So any incorporation would not have any economic substance.
I mean, it's a good point. So there could be something there. There could be something there.
I think there's something to go to the Supreme Court.
So we'll see. We'll see. All right. So assuming we don't get that decision in the next week or so, our next podcast live stream would be next Tuesday, and I propose we do the negative proceeds of disposition case, the Cineplex case.
Sure.
You know that one?
Yes.
Yeah. So that's we'll do that, and then if this application for leave comes out, we'll swap and we'll do the application for leave.
That works.
Okay, good. So until next time.
Thank you, everyone. This was the Tax Files.